Good morning, everybody. Can someone just confirm on YouTube that we've got volume? Test. Test. Hearing it on my end, so that's good. Good. So this week, we'll see SPY coming into Friday, right into the recent lows, except we are kicking into some broadening expansion potentially. So you can see they bought yesterday, at least overall, and we're closer to taking that down. So the question is, where would we be going? So if we look at the week, we're momentum shooter week down below 661.36, which we are below. So the next targets are down here and left. So these would be the targets on Friday if we're gonna see the market actually stay weak into the open here. On the SPY, be around $650. Dow Jones is pretty much gonna be the same. It'll be slight green day and then closer to continuing lower. Sorry about that on Discord, guys. Recap quick. But you can see SPY, slight corrective activity. So it's slight profit taking, not a reversal. It's closer to continuing down below 655.05 into 650 and maybe 645 if they want to keep selling them off. This week, they have just followed through on a lot of things. So if we go to Dow Jones, looks similar. You're going to see they have nearby targets in here. So slight correct activity, slight buying, and then closer to continuing lower this morning. IWM will be an inside day after an outside day. And if we take a look at the Qs, a little bit more firm in tech. So if anyone's going to recover, it'd be tech, but even them, they're opening inside day. So we're thinking things are closer to continuing down besides IWM and Qs. We'll have to see, do we take yesterday's lows then in those guys? Because we want all four indexes going together ideally. Now, it is called the Gapper Show on Friday. And take a look. You'll see SMCI with a very large gap down into 2261. So we'll see how that plays out. It's nowhere near going outside day, so I'm not sure if we're going to get the gap down buy in there. We'll see FedEx gapping up pretty big, right under the all-time highs, so we're going to have to wait and see how that one's going to play out as well. Maybe we could target to go back through that, but we'll have to see. Dell Technologies, which is just under all those all-time highs as well. And the recent highs to the left here. 168, so we'll have to see how that plays out. Now, it is an outside day. If they were to start ripping back through here, but they got a lot of gap, they're going to have to close. That's going to be the case. Then let's see ARM in the chips. So ARM is going to open right into the top of the broadening formation, which is pretty interesting. So it looks like a lot of these gappers are just up into recent highs. Fly Aerospace, FLY. Also, we're going to see just opening right into recent highs. So nothing too crazy on the gap list. Looks like we're going to let those guys open this morning. Let's take a look at oil and see what they're doing this morning. It looks like a whole lot of nothing still. If we take a look at US oil, you'll see it's still an inside week. So next week is when oil is likely to get a bit more volatile there. If we go to gold and silver, these are definitely interesting in my opinion because we're at the bottom of the really big broadening formations. If we can redraw right to left, look like this on gold. See the new highs, the new lows. Now what? We go to silver. It's gapping down very slightly, but similarly, you'll see the new highs, the new lows. and maybe new highs. If we look at the week, you'll see this is nowhere near coming all the way back to set up for next week, but it could. So we'll see if silver and gold do firm up into the end of the month or the end of the week here. Yeah, good morning. And if you guys have anything you're looking at, feel free to let me know. And we'll take a look at that before market open. We still got about 6 minutes. But on the upside of things, uraniums, URA, we'll see the hammer day here coming into Friday with CCJ, also a hammer. So the market's going to keep going up, or going to firm up more specifically. These guys are a little bit more interesting just because if you look at something like healthcare, you'll see this is closer to just continuing lower. Staples, just closer to continuing lower. Energies are still firm, so that's a good thing. We'll see materials, maybe a little closer to reversing, so a little firmer there, but not much. See real estate's closer to just continuing lower. So you note for the most part, nothing's really close to reversing besides the uraniums, as well as potentially some technologies, but they're all opening inside day. So we're not in a biggest rush this morning, just because we're going to have a lot of ones right when we open up. Take a look. Sarah had some bullish setups on her list last night. Let's see HIMS. So HIMS would be a little closer to reversing. It is stronger this month. So if you look at HIMS this month, you know, they're up 66%, which is pretty nuts. Still inside though. Circle closer to the RevStrat day in Sarah's list. Yes, Lanky. Well, you're going to help me track those gappers this morning then. XRP? Yeah, so once it's going up this year, yeah, I'm super interested. It's still not green. 1.8392. If we're not above that, it's not a buy this year. Because you'll note, if XRP is going to go up this year, it has to be green on the year. So see how this went green, then it rallied almost 400%. Then last year, see how it was green here and it went up 76%. So logically speaking, if we're green here, then we can go up. If we're not green, we're going down this year. So we go to the month, 3, 2 down, 1. It has not reversed either. So if the month hasn't reversed and they're still selling this year, how am I supposed to be in there? Got to change that. SoFi, let's see. Yeah. I'd say Upstart probably looks a little better in SoFi. I'm just waiting on XRP. I'm not in a rush to get it till it's going up. Tech and Bitcoin sectors. Well, You got inside quarters, so you still have 11 days to close those out. If they're going to hold on just for, the next week to try and get those inside bars to close. But today specifically, these would just be closer to firming back up if we look at them. You got this. Small little daily broadening formation, but we have this much bigger one. So if we're going to get the big puke in tech, you have to get below all this stuff, and we're nowhere near doing that right now. TLT. So this is what happened. See this outside month? So we go to the 2 week. With this 3-2 signal expanding, the next month opened. When that went red and came back in, it stopped me out. Because we create winning positions, then we just hold. If they don't keep going, there's no reason to hold it. But if we look at SPY here, we'll see. Anyone that bought yesterday, if we take out yesterday's lows, those guys may just be forced to sell into what we would say is the monthly group, the weekly group, daily, and 60 group all selling. But they open as an inside day. SPY, Qs, Dow, IWM, all scenario 1. Circle, yep, closer to the RevStrat day break this morning. Uraniums did go reversal on the day. Let's just start off the day. SPY should be taking yesterday's lows, and then we'll have to see. It's continuation. But again, we have those buyers from yesterday who may be still in those positions about to get taken out. You'll see Qs is also bright red starting off the day. Dow is still green and inside. IWM is still inside as well. If you look at energies, XLE, they continue. The OIH and XOP are still firm from yesterday and from the yearly signals if you've been following us on YouTube. In 2026 is trading. Sector basis, it looks like utilities is one of the stronger ones today, but that's not saying much. There really is not much we're seeing that it's going up. A sector basis this morning. SPY is still right about to take yesterday's lows and continue. It'd be the first one to do it. Everything else still scenario 1, so no fun. FedEx starts the day as gap up sell. 3 and then 2 up in red after going outside weak to the upside in FedEx. So you can see FedEx here gap up after a 3. They could go outside day back to the downside. At this point, we're right around last week's highs. So the question is, are we just filling that, or are we going to reclaim and stay below last week's highs after going outside weak? Meta. Yeah, no, you got way more to go. Broadening formation's down there. 479.80. So he's got 120 points left on that Chuck. Let her rip. Circle the Rev Strat day up for Sarah. Tesla, another smash day. Yep. 2-2 quarter down off all-time highs in Tesla. That is no good. Not for the buyers. There's your continuation down day SPY. So notice anyone that bought yesterday, right there, now they're in trouble because the market's still going down and they bought yesterday. They're going to have to do something about that. FedEx is closer to taking the fivers down. The spreads there are not the best on the next week options. This week might be a little cheaper. They're still inside on the 5-minute, but closer to that reversal. FedEx does reverse on the gap up, back below last week's highs as a level of reclaim. Right there, 367.20. Thing with the gappers is you just want that to go. You don't want to stick around if that's not going to work. Is we're so early in the day, there's no sense in sticking around if things aren't working. Dell on the gappers, 3-2 up day goes into all-time highs, and they're still buying it. Three of the four indexes are still inside day. Circle is still Rev Strat day to the upside on Sarah's list. These inside days are just not going to make today very fun until that can change. You take a look. You got some very small broadening action on the US 500 this morning. Now they are at the lows of it, so maybe trying to get out of it, but this is what you're working with. You want to get out of this consolidation or this broadening formation. To see a bigger move today, Oxy still gunning to the highs. Energies, XLE still gunning to the highs. And XOP is inside day. FedEx, after very slight profit taking, they're still at the lows as a 2-2 5-minute reversal, but you can see 5 minutes later, with 1 minute left, has gone anywhere. No. So it didn't work because they're selling. They hit the lows, and either that seller's done or there's someone sitting on bid. So what's the next setup there? SPY is still below yesterday's lows, and Q's still inside day. Dow still inside day. IWM still inside day. Potentially on silver, you got some levels of reclaim to trigger yesterday's highs after slightly lower lows. Gold isn't really doing too much either to start the day, though, so we'll have to see. You can see right now, anyone that bought SPY yesterday, they're in a losing trade. So what are we going to do about that? Next target's $4.41 lower below yesterday's lows on SPY. Semis are just so much stronger than the market. Look at SMH. You'll see SPY's taking yesterday's lows. This is not anywhere close to doing that. It's actually closer to breaking back up. If you look at the semis, you got some pivot machine gun in here. If they do firm things up, you could have pivot machine gun through all these guys in here who are short off yesterday's highs. And if you're a buyer, you want to buy strength. So semis would be where we see a little bit more strength, you know, at least as much as we can see today. FedEx on the fivers, they have not reversed, so technically they're still good. They're just taking their sweet time. Apple 240, 342, true. Yeah, well, you got shorted after new highs, like right up in here yesterday, 251.83. And see SPY, they took out yesterday's lows as continuation, which isn't a signal, although we know they are trying to go lower. We'll see that lower low and then slight profit taking, but that didn't really change anything. The day is still red for now. And Qs, Dow, IWM still inside day, so you just don't have a lot of twos, and twos going 3. There it is, FedEx follows through. You can see the 2-2 reversal fiver and then 2 down continuation. And it looks like gap up, 2-2 tenor down. Sarah's getting what she wants on circle above 129.74. It still has a magnitude to 136. NBIS inside day back up. Yeah, you got the 15-minute hammer. So about 2 minutes. The 15-minute hammer could trigger the inside day up. Maybe change the week from red to green. The only thing is, once you've done that, you're right at the top of this. So can you pop out of that above like 124? They're actually going to continue. On the gappers, SMCI didn't quite gap into the big pivots at 1725 or that. So it starts as gap down buy, but I call this like digging in the dumpster. It's gonna be pretty hard for this thing to come back. Just because of how bad that gap down was for SMCI this morning. Something notable, boys and girls. NTNX was on our weekend vid list, and we just reclaimed a 3 on the day right here. So what, 40.10. 40.10. Maybe we'll get a 15er in there. Try and go the other way. See if it sets up. SPY, you can see still 225er after slight lower lows to yesterday's lows. So they take the lows out. The buyers buy it back. We go to Qs, still inside day. Dow still inside day. IWM still inside day. We go back to the semis. We'll see the pivot machine gun kicking off a little bit. They're still inside day. What we're more interested in semis is, can we take yesterday's highs? Because what that would show us then is that this buyer from yesterday came back to get more, and they're willing to pay up. Even then, there's not that much magnitude, but we'll see things like ASML. You got all these pivots to work with up in here, and ASML is a pretty big name, so for Lotto Friday, that might be worthwhile to looking at. Yeah, there's NBIS going off the inside day. You can see it just pops right up there, instantly up 1%. But now you're right at the top of the broadening formation. So can that stay there? Circle, you'll see, is still following through as well off the RevStrat day from Sarah's list. Good stuff for the Circle traders. And you want to just stay above yesterday's highs. Things are going to stay nice and smooth sailing there. So you can see SPY, what do? They sell down, profit taking of the shorts, stop them out. Now here's your good morning triangle or good morning broadening formation. And we call it that because this is how the market says good morning. Forms a nice little broadening formation. And then it starts growing the rest of the day. Tick, tick, tick. And that's going to start getting us moving. See Dow Jones with the good morning broadening formation as well. Ticks down, ticks back up, right back in. Down they go. And IWM, a little bit more stuck, but here's the good morning triangle in there. $15ers down FedEx, confirming the 5ers and the 10ers. FedEx, 15ers down, confirming 5ers and 10ers. And I want to add to it again, but I'm not going to, just because the spreads there are not the best. But I would have loved to go and add to it more. So we go back to NBIS. Right here, right into exhaustion risk, because we're making those slight higher highs already. This is why with those signals, you got to be aware of where your targets actually are. Because the bigger the targets, the better. And they're really tight like this. Either it's going to work or you just got to get the heck out of the way. For now, they're still in force on the day. So they're holding yesterday's highs. You'll see Circle on the RevStrat day. Still very nice. Very good stuff. Just want to tell it to stay up there. FedEx, puke. And that's the third ad technically. That would have been my third. But we're just going to hold on. And what we can do is we can always just move stops to not be in a loss. So if I shorted FedEx here and I added to it here, on this yellow line, that's where I can likely have a stop. Or lower. NBIS shorts are in trouble. Ooh, yeah, they did take them out. So you're right here, right at the tippy top. So you can see you have the sub triangle in here, and then we have the major triangle, right? Current level is 123.78. So you want to stay above 121.80 and pop out of that. See, Mike got issues. Get, circle, get. Up 2% so far on the rev strat. AA and FCX. Close. So this is the thing, right? Look at materials, XLB, nothing. You got to be aware there is actual buyers. So like if we look at Circle, why is Circle going up today? Well, they're buying it today. They're buying it this week. They're buying it this month. At potential outside quarter, buying it this quarter. Potential outside year from here to here. 127%. So you can see on every time frame, from the daily up to the year, we got targets and we got a buyer. Now that doesn't mean this has to work, because this could turn into a crowded position. Look at this. This thing's just jamming up into the highs since back here. So eventually it's a crowded position, and then what happens is you go triangle they out, stop them out, and then you keep going the other way. So we'll see. For now, they're a little firmer today, so that's something worth watching. Look to NBIS. Look at this. There it is, Chuck, right there. Flip it short. Try and take it the other way. Right there. Anytime it's below 122.23, you could try and flip her short or go the other way on NBIS. Come on, FedEx. More lows, please. SPY. Nice good morning triangle you got there, SPY. New high day. Boom. New low a day. As they should. You'll see you go to the 5-minute. There it is, the triangle. 2 goes to new highs, and then 2 up in red. Boom, back to new lows. You stop out the shorts, and then we go. And you can see this is proven broadening formation on SPY, because that's an outside 15er. It's got to be a broadening formation for sure. Dell green to red day on the gappers from all-time highs. Dell green to red day on the gappers from all-time highs. And that matters because yesterday was an outside bar on Dell. So we want to know about that. Good mention. If we go to the 30-minute on DELL, Dell, you will have a 30-minute shooter coming from one of its monthly pivot targets. They're going to reclaim and go the other way. Might look like that first. So you can try and time that 30-minute signal in about 8 minutes here. You can see SPY now. This would be considered broadening formation, expansion, where the price exits the broadening range. And you'll see it acts as resistance almost to the penny right here. You'd want to see them stay below that, or else you're at risk of going all the way back to high day again for the good morning triangle multiple times over. So you'd want to see that hold. If we're going to 650 right now, you'd want to stay below 654.61. Come on, FedEx, puke. Give them the puke. They're just barely holding on for you on NBIS, Chuck. You see Circle? It did go up a little bit, so we're able to create a winning position on the rev strat, but then they come back. So now this is a question mark. Because look at this on the 15. Second 15-minute of the day comes back into a 3. Right? It might triangle back down. So some of the strength we did have is not sticking around. The reason it's called the Gapper Show is because we trade the gaps, or at least we focus on the gaps on the Friday live stream, especially when things are moving. So we'll see the futures. There's your broadening formation that we pointed out before. See the test the lows, the highs, stuck in the middle, broadening, test the highs, test the lows, stuck in the middle, and then right here, breakout for now. That would be nuts if this thing actually kicked in the way it looks like it would. You can see it's got a lot of distance to close that gap, which is the only thing. But when you got an outside bar from yesterday, this is still the top of the broadening formation, even though it's much higher than the previous high. FedEx, more low of day. FedEx, nice short you got there. FedEx down 8 from the initial mention. And if you got it right at the open, that was a very nice one, 5%. But can't win them all perfectly, can you? Gold and silver. Looks like they're still inside day silver, and then gold is like slight 2 up red. So still having trouble there. If you look at the SPY, you'll see the retest of resistance right here. And notice if this, we call it the good morning triangle, good morning broadening formation. If that's going to act as resistance right here, it has to act as a broadening formation over here. So they go down, then they retest, and then they go down. Then they're right back in the middle of it. So how are we going to get out of this little one now? Can we pop out of the bottom of that and give us that 650 on the month? 650.84, right? 1 penny below that, right down here is what you want to see. We can stay below all that stuff. Heck yeah. FedEx, there's slight short covering going on as a 225 minute. So it's your first corrective activity against that. While the market's at the lows, the only thing really not is healthcare's, energies. Yeah, XLE, XOP inside 15ers forming. You'll see SPY back into triangle expansion if it's below that. Right, 653.88. So below 653.88. Should see much lower. You see circle, that's no good. 3 ticks up and then reclaims a 3, goes all the way to the other side. So that's countering what we knew on the daily, because the day is no longer in force. You can see this is potentially outside bar to the downside, countering the rev strat, because this rev strat should have gone. What this shows you is since the monthly is green, the week's green, the day's green, or was green, shows you that that monthly buyer was here and then it didn't go anywhere. So there's either unknown selling going on or that buyer's done buying. Either of those scenarios, you know, not looking bullish for circle on the second 30 of the day. That could go outside bar the other way. Puke, SPY, puke. Give them the good morning triangle expansion. Come on. If the market was bullish, circle would have worked. More than likely, yeah. We just see everything's pretty much going to the lows right now. If you go back to US 500, you can see the big broadening formation on the 5-minute. If you're going to time breakouts and stuff, that retest is always, it's just so money every time. And if it's not, you're risking like 2 points. It's like nothing. Look at this thing. Puke. Down they go. And there's new lows. So you go to SPY, you got your puke. And you'll see how the good morning triangle, it just shows you exactly what's going on. New low, new high, new low, expansion, more lows. Now, are we weak enough to complete this, right? We're looking for 650.84, 1 penny below the monthly target. And this is something we talked about 2 months ago, getting taken out. See, while that market is just smacking the lows, energy is not so much. So they're just very, very firm still. Now, if we look at the 15-minute on SPY and zoom out of this, the 15-minute is a scenario 3. So we want to play that like a broadening formation. We can redraw it again. Boom, there's your 3. That's a broadening formation. So you can see the good morning triangle, as we would call it, grew in size, and then the new 15 right here. Does it keep confirming that and getting bigger? Because once that broadening formation happens, it's a broadening formation. And you can leave this drawn however you want. If you wanted to leave it drawn the way we had it before, this, perfectly fine. Or you can redraw. By redrawing, you just get a clearer picture of what's happening here. Look at Qs. Look at that. Anyone who bought tech yesterday, get out. 3 2-week down. You'll see the 2 down month. And this is important. They sold last month. They came back to sell more. And that's what we see happening this month. So Qs 580.74. It's got a little more distance to take that out, but they're doing the same thing. Dow Jones inside day. IWM still inside day. So SPY and Qs are just a little bit weaker. FedEx, they're still profit taking of the shorts in the morning. Come on, SPY, puke. You guys able to play the good morning triangle for those of you in the stream chat? Been waiting for this forever, right? Right, SPY? Dell 30's down, Shooter 30's down, Dell on the gappers. Now, the only thing with Dell is you got nothing to come back through until you fill the gap. So that 30 shooter should just go. We don't really want to see that hesitate. At worst, you'd have like $1 stop on that, which is a little wide, but worst case scenario. What'd you say? Need a TTO on SPY for a big run? I mean, hey, if IWM and Dow stay inside day and SPY and Qs hit their targets, that'd be crazy. Probably get some short covering off of that. But really, guys, like there's just not typed in not. There's not really anything going up. Let me show you. There's some specific names, but on a sector by sector basis. Let's see. So we look at the day, you'll see energies, little materials, but a lot of those got countered this morning. Little industrials, little tech, little financials. So if we look today, about 61% of the market's going down to start off the morning session. And then look at this, financials, 51% inside bar. It's crazy. Industrials, 51% inside. Materials, 53% inside. Like, wow. So what we'd say, materials, financials, industrials, energies, they're firmer, and then energies is the firmest. Is that you can see the yearly, quarterly, monthly, weekly, daily 60 buyers in energies. So the yearly buyers in there today in energies is how we'd look at that. See SPY, they're retesting the little baby triangle right in here at 653.50, trying to go back down. So slight triangle out, stopping out the tight stop, guys. We'll see the US 500 right below these previous lows here. They retest it and they're staying down. So we just want to see them go. If they are going to really expand this thing, this will be your 60-minute sub triangle in here on the futures. And this would be the major, the bigger one. So you can see we're right at the bottom of it. We don't know. All we know is if we're below all this stuff, then market's still expanding lower. If not, we're reclaiming a broadening formation. So want to see the market stay down there, or else you might get that short covering, especially with a lot of the market still inside day. take a look at the leaders this morning. Inverse VIXI, inverse gold miners leading. Blue Sky, inverse gold miners, inverse Tesla. VIX. Enphase, SM, Oxy, APA, so some energy stuff. But man, it's a lot of inverse ETFs leading this morning. That's never a good thing for Mr. Market here. So we look at SPY, you can see it's been selling for the last 20 minutes. And after making the new lows, the futures get a little bit of profit taking closer to a 5-minute reversal. So we go to the 15, outside bar broadening formation, ticks down and then comes back in. That's a broadening formation, so we draw it like that. Now, since we still have that bigger target below us, we'd prefer, stop some guys out and then keep going. Give us that 650, maybe a little further. For now, Dell, nothing. It is green to red on the day still, so anyone that bought Dell today, they're still in trouble, but nothing. Oxy monthly target hit. Let's see it. Yeah, we're not looking for these little baby targets, though. We're looking all-time highs. You still got 86%, 51 points to go in Oxy. Doesn't mean it's going to happen today, right? But this is what you're looking like on the 60. Sarah's looking at something Trump's doing. Let's see. Trophy presentation today, 9:30 in the morning. Interesting. You can see FedEx on the 15ers. They're still profit taking those short positions. So anyone that shorted or sold FedEx, this is profit taking or a buyer showing up and profit taking at the same time. A big trophy, a wonderful trophy. Yeah. You can see for now, they pop up very slightly, slight higher highs. That's more than enough. Stop out, tight stop, guys, and see if you want to keep on selling on to those lows. NBIS for Chuck, you got your reclaim levels kicking in. You made some lower highs, lower lows. You can see reclaiming that 3 just like Circle did. In this case, they just retested it. They're trying to take those morning lows out and rev strat that thing. Oxy, after making the new highs, you can see to the broadening formation. Get profit takers showing up. Buy went slight fivers up to stop some guys out, and then they're right back at the lows for now. Qs look similar, Dow is similar, IWM is similar. So, Thus far on the second 30 of the day, the sellers are still here across the indexes. Uraniums, healthcares, industrials, staples for sure. Energies are still a little bit more firm across the board. Got about 20 minutes till we get to the second 60s of the day. SPY's closer to the 2225 or down continuation. FedEx, for those trading the gappers, yeah, inside fiver cooking up, maybe a pivot machine gun, like $5 of range to work with. Curious to see if NBIS actually works its way all the way through this today or not. You can see 325er down pivot machine gun, which should speed it up, but still inside 30 off the top of the 30 triangle in here. So it's an interesting looking chart there. So you can see SPY, puke. You see they slightly stop them out, then boom, seller comes back. And now, once we're at low a day, we don't know. We've already made the new lows. Anyone trading today who's winning is short from here to here. So either that all these shorts, right, start covering their short, or they don't. We still have that seller present. So we don't know. But we do know we got another low on SPY, and we still have a couple dollars to go for the big target. FedEx went 225er pivot machine gun down, so you didn't get the inside bar. But you'll see, just like SPY, 222 shooter counters hammer 15er FedEx setting up. And a shooter counter hammer is cool because it's momentum. It's just like a rev strat where it should just go instantly if it's going to work. You can see NBIS, the 325er pivot speeds it up, but they're still inside 30 unless they can take out the morning lows as a 3230 down. Hughes is getting wrecked with tech, still not having a good time, although there's firmer this morning. You can see they pivot machine gun all those 60s. So look at Hughes. Everyone that bought yesterday, right? They're in trouble. And it's not just the guys who bought yesterday. It's anyone that bought above current prices. So if we just look left, right? Anyone that bought above this in tech, all those guys are in losing trades. So they're having a bad time. And you can see it's really interesting. They're kind of just buying tech as much as they could until now here. Look at all these buyers. They're losing their broadening support right here. So if you lose your support, we're going to start taking you out, right? 580.74 on Qs is still down there as a target. And then SPY, you're coming into our target very soon. 650.85. Look at the 5-minute. Puke. 222. It's a downtrend, then an uptrend, then a downtrend. Beautiful stuff. And let me just, before we finish this off, you guys are my witnesses. You saw us discuss the good morning triangle. Also saw us discuss the retest of that. And you saw us discuss right up in here, creating that lower high. Last thing we need is that target, and then we've done what we wanted to do this morning. We still are just a little bit of ways away. FedEx, your 222 shooter 15 just formed and closed. And that's momentum if it breaks 361.91. Cause a 2-2 30-minute to the downside. So you can see SPY on the new 15, the new fivers. Notice this. Previous 5-minute reversal, the 222, gone. So there's some profit taking. And this is now inside 15-minute. So this would be retracement above the 15 open. It's retracement, not reversal. And all that means is that when you're inside like this, more often than not, you will retest whatever you just broke out of and then keep going, or just, slightly go up and then keep going. It's what we'd want to see. But it looks like all the indexes just went inside besides IWM. Everything's inside 15. So just be aware of that inside bar. Much like before, I'd like to add to FedEx, but with those spreads, I'm just not going to. Don't want to get lost in the spread. Just a little bit more SPY. So close. The interesting thing today is we are at the bottom of a lot of these big broadening formations across the sector, since most of them went into the lows. Now, some of them are still inside. So materials is inside still to yesterday's stuff. See, healthcares, they're just getting demolished. Taking them all the way down. That'll help SPY get a move on. You can see SPY, you get your retracement inside 15. It reverses down, but we have to be aware it's still inside 15. So that reversal down stays true, then we're going to take this out. If not, it's going to start broadening in here. So you want to see that just go. If they're going to puker, either that or you're going to get an inside bar. On the SPY, the Qs, the Dow. Dow's a little closer to confirming the downside, as it's 2-down day and leading the market to the downside in the industrials. You got a lot of healthcares in Dow, which is why it's been puking so hard. If you look at XLV, it's very clear cut what just happened this month. You see this. The inside month, pivot, pivot, pivot to speed it up. You get the reversal. 2 up, 1, 2 down. And this is like not a 2-month rev strat, but it's like a delayed rev strat. You have the inside bar goes up and then rejects to take the mother bar lows out down here. If you go to Dow Jones, you'll see similarly, they're not having a good time this month. 2-2 month. IWM similarly. And SPY and Qs, they were already going down going into this month. You can see with the inside 15 on SPY, they go up a little, go down a little, they go up a little. So it's tightening in here just a little bit. We close out the inside fiver. So if this is going to follow through, we'd want to see 2-1-2 down fiver. If not, still inside 15. Energies taking out the morning lows, XLE. OIH is doing that as well. So only things that were going up were energies, and XLE is not staying there. So if we zoom out a little bit, on Friday, what you can expect is profit taking. Because they've been buying energies all week. Friday, they're like, all right, I'm going to take some profit into the weekend. So that's what we're seeing right now, XLE. MPC and VLO for those from the nightly vid list. It wasn't a video, but those guys are taking yesterday's lows. So in the energies, if energies are going to be weak, you can already see MPC is in force. It still has, you know, like $8-9 to go today. SPY is still double inside fiber, so you're going to see the broadening formation right there. There it is, 3. So it restarts. Get this tiny little broadening range, 3. You can see they pop out of it, breaking out to the upside. Now just got a tiny bit bigger. Looks like that. So we go in here, you can see it starts really small. This is a 15-second. 3 goes 3 cents higher, and then boom, 40 cents the other way. And to the bottom goes 70 cents the other way into the top. And then it goes 80 cents the other way, right? Just go tick, 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 taking them all out. Give it to us, SPY 650.84. Bros hammer day triggered. Nope, still inside day. SEDG inside year up. Yes, true. SEDG spread been a lot higher. So here's your broadening formation. It's 1,000%er right there if you're if you're trying to go for it. End phase doesn't care about the market. Yeah. Well, end phase, look at this. Market's full time frame continuity down. This above its month open, above its week open as a reversal, above its day open. That's institutional accumulation. Same thing's true with SEDG. Is when you have the whole market going down and you have a stock that is for sure going up with full time frame continuity, there has to be some type of institutional buying going on. Just like energies, right? We look at energies the past couple months. SPY reversed down, you know, how many months ago? Let me see. So SPY reversed down last month, early last month. So we look at energies, this never reversed. There's still buying going on there. So that is notable for sure. See how the 3s are getting bigger here on SPY? They go 3, 3, tick down, back in, and they're just restarting the really tiny one. I will be back in just a minute. For now, FedEx on the gappers inside 30, so that's the next thing we'll see what we get. Dell on the gappers, they made new low a day, didn't go anywhere. So either there's not much interest there today in Dell, or there's there's some selling going on, but the buyer's still there. So we'll see as the gaps play off, but I will be back in just a few minutes. All right. So for now, you can see they're just sitting at low day. SPY, Qs, same. Dow, same. IWM, same. So not reversing, but they're going sideways. Healthcare's firms up a little bit. Staples firms up a little bit as well. Ooh, AMD was a good one this morning. Look at this. 3 on the day. Ticks up by a penny and then going the other way. This is why we love the threes. 42 cents higher goes 62 cents lower. That's beautiful. Come on, SPY, give us another low. Just want 650.84. That's all a man can ask today. Should be like $1,000 on SPY if that hits. Smash that SNDK. Let's see. Yeah, look at SNDK too. 3. This is why we love the strat. Look at this. 3. So you can draw that broadening information out. $1 higher. Boom. $50 the other way. That's 1 to 50 if you're timing that properly. It's crazy. It's crazy, I tell you. Broadening formations are beautiful. That being said, I do want to test out for anyone that is newer to the strat. Looks like we got a good chunk of people here. I've been working on some of our educational stuff, specifically around the broadening formation. So we might test that out later today in the stream. See what you guys think. Materials is still hitting the lows, getting destroyed. Dow Jones made another low a day, and then everything else is just right inside fivers at the lows. So SPY and Qs close out those inside fives. Qs right away pivot machine gun up on the fivers, so slight profit takers. Pop some people out, hopefully. Give us our target. Yeah. So today, normally on the Friday streams, for those of you that do join, normally we go a little bit longer and do some educational stuff. Sadly, today I've got some stuff to tend to. So we'll still do it, but we're going to be ending off a little sooner than normal. Energies, you got 32215 or an XLE, so they firm back up a little bit. Oxy 22215er. EVX, what, 30s momentum, there's continuing. You see SPY, there's a buyer, and then they tried to sell it. Now they tried to buy it. It's going back and forth with this little 1 minute triangle we identified right in here. See 3 ticks up, ticks down, and then stuck in the middle again. 3 ticks down, ticks up with a slight higher high. And then what we'd say, if this could kick in the other way, probably would make a new low day. For now, there's right up there. And this is a 1 minute, so we're not trading that. I'm just watching. I want to see a slight higher high and then give us another low day. But we do see IWM firmed up as well. After taking out a ton of these lows, they're still inside day in IWM. So small caps, you're looking at this. You get the lower lows to this and then profit taking. So might take out a little bit more on the short side of IWM. You see SPY now on the oneers, expansion of that. So this is now kicking in the other way a little bit. So you might get a little bit bigger triangle layout up into these guys. If that holds, but preferring to get this lower high in here and give us the broadening formation the other way. We're not trading this tiny ranges like $1 wide. No, no, no. FedEx closed out its inside 30 with the new 60s opening up. 2 up, 1, 2 down is what it's closer to doing on the gappers. FedEx. See a lot of healthcare's firming up across the board with 31230s up. So a little bit of XLV firming up. You'll see 2215 minute after low a day. Back into a previous range to cause short covering. See SPY, they're still popping up. And notice when this is happening. I was not keen enough to say it, but on the second 60 of the day, when the 60-minute open separates from the daily open. So right now, we would still say this is retracement, not reversal, but the 60 flip went green. So if there is going to be any selling, we'd have to get that red again, right? If we're going to actually give us our targets we want to see. Therefore, what we'd have to see is they pop up and then start coming back through whoever this buyer is. Reddit heading north. It was. So notice Reddit, what's it doing this month? It's not going up or north, so to speak, inside month. So it's not this month. Now this week it is a 2 up, but just look at how small your range actually is. I mean, 10% maybe, but you'd have to be above last week's highs, and it's not. Now the day, you have a 1-2-2, but it's not a hammer or a 2 down in green. It's just doji. So they're just chopping them up. That is for sure. Energies off your 322 and XLE, they did get going. XOP off your 322 is also firming up a little bit. And OIH is a bigger broadening formation, but 322 as well. You see how the 322, you get the 2 that goes down $1, and then you get the 2-2 reversal that goes up more than $1. So right now, all 4 indexes on the 60 flip have reversed. You see how IWM is coming back through this broadening formation here. Being a little stronger since it didn't take yesterday's lows. And then Energies is your strongest, 322. Is it still green on the day? It's still going up today. CVX on the inside 30 directional. They're almost high a day. Them all out. I just want to see like this and then call it a morning. Then we can start and discuss some broadening information, maybe answer a few questions. Then we could call it a day. Chuck Norris passed away at 86. Who's Chuck Norris? Oh gosh, that's so funny. I figured you guys would love that. That's funny. All right. Oh my, what? No, I'm not being for real. I have not seen that famous movie he's in though. I probably should see it. I'm never listening to you again. Blocked on everything. Oh, that's funny. So right now, Q's inside 60, SPY inside 60, Dow inside 60, IWM inside 60. So, you know, how are you going to change that? That being said, since they're inside, you see they tried to sell it all the way back down. And now here's your inside 60 broadening formation starting here. 3 goes up, goes down, comes back in. So how are we going to get out of this thing to take that 60 consolidation out would be the question. Ideally, what we'd see is this lower high, the lower low, and then take them all out. That's what I'm looking for. FedEx still stuck in the middle. And what we'll see is FedEx is double inside 30 and inside 60. So how's that going to change? Oxy, very nice. You got the 2, 2, 2. Boom, up they go. You'll see energies 3, 2, 2. Fun to say, fun to do. Not the biggest move in the world, but you can make good money on options there. OIH, you'll see the 3, 2, 2 in there as well. A little bit of a better move. This triangle plays out, you get 2.15%, which is good stuff. Similar to yesterday, we had this beautiful one. We had the 2, 2, 2 yesterday, but this is such a pretty one. We're getting the same thing today. So the biggest thing for us today is this. We look at the futures broad information in here. You can see price tested it multiple times on the downside. Now it back tested it on the upside. So if we're going to get this thing to expand, we want to see 2, 1, 2 down 30s, or you might start coming back in the other way. So I want to see it below that 655, 6 on the US 500 on the ES. It's probably around 6,605, give or take. If we actually look at the US or ES, this one has yet, at least according to this chart, it's 15 minutes delayed, but this has yet to take this out. So you still got a little bit of range to take out. It's what we want to see. Sometimes it just takes a while. You got to get enough people willing to buy before you take that out. I'm too young. No, maybe you guys are too old. I'm just kidding, by the way. All right. Well, I mean, for now with the inside 60s, it'd be better for us to just not, right? For now. Um, the best trade it would be if this thing could actually take out the morning highs, and we're nowhere near doing that. So we're not going to get the best trade one last around. So give me a minute or two, and then we'll discuss broadening formations. Or if you have specific things you want to question me on about the strat, drop them in the chat, in the YouTube chat, or drop them in the Discord chat for you folks in Discord. And I'll be right back. All right. 1 second here. YouTube stream might cut out. All right. Let's get a light on. Whew. A little bright. FedEx low day. Let's go. So we did have one question. How old am I? I am 23 years young as of October. Last October. I'm up a decent amount of my FedEx puts, but I want more. I want to see this thing go all the way outside today. I just don't think it's going to happen. So what I'm going to do is I'm going to reduce half of my puts in FedEx just because those spreads are so bad. I wish I would have done it at low a day, but it is what it is. We'll see if it goes inside 5 minutes down. For now, indexes are still chopping. So I'm the 8th. So Oct 8. Check light? Sure. Ooh, yeah. You're going to love this chart. You're going to be like, I can't believe I didn't short it this morning. Look at this, down 10% from the gap up. That's beautiful. IBM becoming an outside week? Maybe. You see how it's an inside month? It's not doing anything. So most people, what they'll do is they'll trade inside months and then look at this. Doji, 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 Doji. Oh, it's really going up today. Doji all the way the other way. Doji, Doji. It's because it's inside bar. You're getting killed. Doesn't mean it's not tradable. It's just less tradable. NTNX new high day. Get green or red to green move, NTNX. We'll see the day. 3 ticks down, and we told you before, reclaiming that could go all the way back up. So that is notable as well right there. Trying to go to 42.26, 1 penny above yesterday's highs. That's what we see there. Not really volume? Yeah. SNDK, give us double outside day. It's close. 30 points left to go. All right. So is everyone here a professional trader? Everyone is we're never wrong. We can see the whole face today. Perfect. No sound on YouTube. Test. Should have sound. How'd you know? Well, I'm curious because a lot of people they just figured it out. No one ever has any questions. There's no sound. Yeah. 1 sec. Can I sing to confirm? No, thank you. I'm good. This isn't a karaoke bar. We go back to your healthcares, you'll see they're firming up a little bit. Utilities, they're still low of day. So they're still selling in the Utes and the staples. Real estates, they're still low a day. Technologies inside 60. Semis inside 30, inside 60s as well. Just take a look here. So you can see today, right? Energies, it's pretty much the only place we see a lot of buying going on. And right now, you got 70% of the market inside 60. Nope. I'm good. Nice comeback on Circle. Yeah, look at your broadening formation right here. Ticks up, ticks down, and then right there. That's your signal on the 5-minute above 125. That's pretty good stuff. And you'll see how it's 3, slightly lower, and then back in, which is what you look for. Just like light today. It's good stuff. So the thing we're going to discuss today is broadening formations. This is a casino. Should you only take signals around broadening formations? Yeah, pretty much. We'll talk about that. But the broadening formations, if you don't know broadening formations, you can't win. And I say that very truthfully, you literally can't. Because if you don't know the broadening formations, you're going to be entering in the wrong spots. You're going to be exiting at the wrong spots. When you get a winner, you're not going to hold it. And when you get a loser, you're going to want to keep holding it. And if that sounds like you, then let's fix it. It's not that hard to fix. It just takes a little practice. So we'll keep the spy in the background. That sounds just like me. Well, we're going to set you free today, buddy. That is what we're going to do. Oops, I'm going to mess this up. Papa, it's hilarious. All right. So I'm going to try and I'll keep spy on my other screen. So my other screen. But, if we miss something, we miss something, right? We're never going to catch everything every day. It's okay. So what is a broadening formation? That's the first major important question we have to answer. And what it looks like, so if we're just going to train your eyes to see what it looks something like this, where we can see over time, price is taking both sides of a range. And it looks like this, where you can see we make new highs and then new highs and then new highs and then new highs. And at the same time, we're making new lows, new lows, new lows. So this is what we call broadening, because it's getting bigger over time. So unlike traditional technical analysis where we're drawing horizontal lines, we don't do that. We draw broadening lines, or at least we should draw those broadening lines because they account for time. Because if broadening formations are true and they exist, over time ranges get bigger, which means over time, unlike the people who draw wedge patterns like this, or they draw, boxes or flags or whatever you want to call it, it's none of those, it's broadening. It's getting bigger with time. It looks like this. So it's the opposite of a wedge or a consolidation. Now, why does this matter? This matters because if broadening formations are true, we can sell it up at these highs over here, and then we can buy it back at these lows. So we can short and we can make a lot of money. We can buy it at these lows down here, and then we can sell it after it makes new highs. So we can sell, buy, sell, buy, sell, buy, sell. And that sounds crazy, but we can if this is true. Because what we understand about broadening formations is if they get bigger over time, we should make higher highs and lower lows. So if we look at SPY, look at this. And this is the next part of it. Do you see this 3? So we're going to show it and we're going to prove it to you that broadening formations exist because of 3s. 3s are broadening because it's making lower lows and higher highs to the previous range. So when we look at a 1 minute, we will see a broadening formation where price goes a few pennies lower here, a few pennies higher here, a few pennies higher here, and then boom, way lower. So what did price do? We had a 3, new low, new high, new low. Simple enough. So when we look at a broadening formation, we can actually prove a 3 is a broadening formation really simply here. Let's just draw a small one out. Something that we can all agree is broadening. Right? So really obvious. We can all agree, like if we all look at this together, we can agree, okay, that's a broadening formation because we've made higher highs, we've made lower lows. That's the minimum requirement, having higher highs and lower lows. So when we look at a 3 is that requirement because it makes lower lows to the previous bar's range and it makes higher highs to the previous bar's range. So this green bar here is a 3, which is a broadening formation. And therefore, 3s prove broadening formations exist in price. And since they are objective, outside bars are outside bars, you can't refute them. Unlike traditional patterns where one analyst might say, this is a head and shoulders pattern. This is really bearish for Google or Tesla or whatever stock they're looking at. But then you have another analyst who comes in and says, well, the head and shoulders pattern, when it fails, is a very bullish pattern. So we have one guy who thinks it's bearish, one guy who thinks it's bullish. They're looking at the same thing. You'll also have a third analyst who comes in and they look at the same time frame, the same chart, and they'll say, no, that's not a true head and shoulders pattern because it doesn't have enough volume. The market conditions are different. Because my dog is sick today, whatever reason they might have, they'll say that it looks like a pattern, but it's not actually a pattern. And it's similar to like when you lay down in the grass and you look at the clouds and you're trying to figure out what's up there and guess and be like, oh, like it kind of looks like this. We don't want to do that if we're traders. We want to be for sure. We want to be like, yep, that is a broadening formation for sure. And since a 3 or an outside bar is a broadening formation, we can all agree. And I want you guys to participate here. In the chat, can we agree this outside bar is a broadening formation in one bar, right? And to make it even simpler, can we agree that this is a broadening formation where it's making new highs and new lows? Yes, yes, right? More. I want to hear. Can we agree? Because once you've agreed, then we can keep going. Okay, beautiful. Now, what is a broadening formation? It's just repeating new highs and new lows. And what this means is if we see a 3, you can see how it's repeating. But if we see a 3, when we go to a lower time frame, you will see the new high, new low, new high, new low, new high. It's going to be repeating over and over. So let's just go to an example. So if we go on meta here, it becomes very obvious what's going on. The 3 on the quarter is a broadening formation. And we've agreed. We've all agreed a 3 is a broadening formation. So if we draw it out right to left, we can say this high is higher than this. This low is lower than this low and this low. So we have new highs and new lows. If we go to a weekly time frame from the quarterly, what we'll see is exactly, and sadly, the lines don't stick around. Let's see if we can fix that. So you'll see this is a broadening formation. Now, where did it start though? Because we said they have to repeat. It can't just be one time. Well, look at this. See how we went 3 on the week right here? This is where it started. It went slightly lower than that 3 and then all the way back to the highs. Then you'll see they tried to come back through it, but it didn't work. The sellers were not aggressive enough. So what do? They form a new broadening formation, this 3. And this is what we would call internal or stuck in the middle. As we can see, this 3 is fully within the previous range from the all-time highs to these lows. So this is inside, and that's why you're going to see price go up and down and up and down, is it's broadening in here just on a very small basis. But then you'll see we go new highs again. So the range now looks like this, new highs. Then it reverses by going red here on the week. Where is it trying to go? It's trying to go from here all the way down into the lows of these broadening formations. So it started really small like this. Then it got bigger, it expanded higher, and then it went lower, and then it went bigger again. So it started really small and then got bigger, 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 and then it's doing it again from here, trying to go down here. So we're going to see this. This is not, the picture perfect broadening formation, but we can see how it is repeating. New highs, new lows, new highs, and it's trying to make new lows at this point. Now to give you even more clear-cut example, let's go to the SPY. So last week, Friday, we formed a 3 on the day. A 3 is a broadening formation, we've agreed. So we can draw the lines right to left. You short it right there at the top of the broadening formation, and then you hold into the bottom. That's the whole trade this week. So we can see, we know exactly where we should time our entry. And we also know exactly where it's trying to go. It's trying to go to the low of this 3 or further. In this case, you can see since it's broadening, it's still getting bigger to the downside. So it's going like this, just getting bigger. But you'll see it again. Last week, Monday, 3. A 3 is a broadening formation. Short it up there, then buy it back down here. It's the same thing. So the 3 always is going to act like a broadening formation. Now, this doesn't mean every 3 will work. And that's the last thing we're going to dive into here. When we look at broadening formations, what you'll notice is for an outside bar or a 3 to happen, it has to look like this first. So it has to go in one direction. So in this case, 2 up, taking the previous bar's high. It has to do that first, and then it has to change color, and then it takes out the other side of the range. So when we look at this, a 3 does not always have to occur, but when it does, we should know about it. And let's just do a thought experiment here. So if we scan for broadening formations, and let's say we had 10 charts that look just like this, bottom of the broadening formation, and we start going back to the upside through it. What should we do if we understand the broadening formation? Well, we know we want to buy it at new lows, and I'm going to make it clearer for you just so it's nice and obvious, right? We know we want to buy it when price goes below the lows and then starts going back the other way. That's when we want to try and buy it. We also know where it's going. If we buy it above this, it's trying to go up there. So what we want to do is enter, add, and then if it breaks out like this and doesn't come back, hold. Because once this range right here where we can be a buyer, once that has happened, we don't know. Either prices are going to break out of this broadening formation and act as support like you see right here, and then we can hold forever until the end of time, or not, or it will broaden again, right? Coming all the way back through here. So there's only two options. We want to buy and then get more. And then when it hits the other side, we have a huge trade. Then the other option is this. If a signal doesn't work. So let's say we have this inside signal. Buy stops us out. Didn't work. So notice we didn't add to it. And it was the first entry. So if we're using, let's say we're using 1% of our account in an entry. We're risking 1%. So if we stop out, we lose 1%. You can take, about 100 trades and then you're going to be almost at $0, right? Obviously it's exponential. But if you take 100 trades and you lose all 100, you're going to lose all your money. Now, if you're learning, it's okay. But in reality, we want to go much smaller than that. When we're learning this, what we want to do is we want to time the entry properly and do that many times over. Because some of them will fail like this. Other ones, you'll see the signal set up and it goes boom, and it goes all the way through it in one bar. And there's obviously like you could say a spectrum in between. You have the ones that go right away. Those are the ones that tend to do this. When they break and they just go instantly, they tend to do this. Then you have the ones that break and they don't really go anywhere and they stop you out. What we want is we want the ones where it breaks, it goes, and it never comes back, because then we can hold it as this range gets bigger. So if we go to, let's just go to light, right? So now it should be very obvious what happened in light today. We had an outside day yesterday. What'd they do? They bought. So everyone's long into this. It gaps up. The second that goes red, where's it trying to go? The other side of the 3 down here. So if we go in, and we just drop this down to, let's just go like a 15. You can see the broadening formation from yesterday's outside day. New lows and new highs. This is yesterday's highs. It gaps up, so it goes above it, comes back into it right there. That's when they're in trouble. Because now everyone that bought yesterday, they're in trouble. So if you short it here, when that comes back in, when it continues, add. And if that works and you're in a ton of money, you can add to it again. And if that works, you can add to it again. And then it reverses here, you can just get out. And we can do that if we're doing this properly. Because we don't want to take one trade and then just be done for the day. However, you can, right? What we want to do is create winning positions and then hold the ones that keep going. So if we have the same setup, let's say it looks something like this. If this is the setup and we just look for charts like this, where we have the signal, we're going back through a range. If we could take that 100 times, you will have the ones, that go to the target, and then that was it. So you hit your first or your big target on the broadening formation, and that was it. This is where you can buy it, flip it short, and make money both ways. You will also have the ones where you buy it, it goes outside bar against you, stops you out. That's okay. We'll also have the ones where you buy it, it goes right up into the targets here. And then we get an inside bar, and then we add to it, and then it keeps going. And this is the one that we're going to have the most in, or we're still going to have our whole position size. So what we want to do is small positions when we enter, and if it's going to the other side of the range, we just add, or hold. So when we look at light today, you still know where's it going. Well, it's at $700. It's trying to go to 665. Now that doesn't mean we short it right now, because right now, where are we? Low of day. So let's go to like an intraday, like a 3-minute basis. Do we want to sell at the bottom of a broadening formation down in here? No. We want to sell once we've taken people out. So if we go like this and we pop back up, this would be when we want to sell, right? Once everyone's long and we can trade back through the broadening range, then we want to go for it. Does this make sense? SPY right now, it's still, you can see just chopping them at low day. Okay. So this is what we'd like to do then. If we know broadening formations are true and we know price will test both sides of a range, we must only sell after we get a new high and only buying after getting new lows. And if we do that, you will almost always be on the right side of the trade because price is constantly broadening. Now, that doesn't mean that everyone's going to be like a giant home run winner. Sadly, not the case. But if you can create winning positions, then you can create winning positions, which means if you buy a stock, like for example, let's say SPY yesterday. If we go to the 60-minute, I don't know if we actually have it there. Nah, you can see just how much of a mess it was yesterday. So just bear with me. Yes, this is Thursday. So if we look on Thursday, here's the 4-hour. Do you see how we have this 3? So if we know broadening formations exist, the logical thing to do would be to try and time entries to go back through it to the other side. We've already discussed that in depth. So you can do that, and you can do it using the broadening formation on a lower time frame. So if we know a broadening formation exists, and then we find one on a lower time frame right here, this 5-minute outside bar, we can time that when price comes back above it. And you'll see we go 7 points lower, and then it goes 36 points the other way, and then it reverses. So if we can risk, 5 points, 4 points, 6 points, 7 points, and the reward or the initial move is 30 points, if we can do that even half the time, that's huge. Because when you do get the one where it reclaims and it just goes flying, you're in. You don't have to get out because you've timed it properly. So, for example, and this is not a 3, but you can see here, still a broadening formation. New lows, new highs, new lows. So would we want to short it down here? No, right? We do not want to short it down here because we're into new lows. We just took out the new lows. We'd prefer not to. What can we do? We can try and go the other way. So when it starts coming back through here, this 3 is a broadening formation, but it also shows aggression. So we made a new low, and then we have this aggression, aggressive buyer and aggressive seller here. And then it breaks, boom, and you'll see how it completes. The lower low and the higher high, like this. So once it does that, if you're in anywhere near the bottom of this range, it's already 22 points. Notice it went 2.8 points lower, 2.8. And then this rallied 64 points the other way. And I'm pointing that out because what you will know is once you see broadening formations, that is happening all the time. Light, $12 higher. How far the other way? 80 points. There's a 3 here. At the lows, they went 33 points lower. Then what? 180 points the other way, right? And again, it's not always going to work. But when it does, your risk is small, especially if you use a lower time frame to enter these things. And your reward is huge because the rejection or the failure going back through a range is almost always the bigger move. So if we go to We go to the futures. Just to seal the deal here. This is why it works. This mess is killing me. Yeah, I'm not touching it right now. Okay, so this is why it works. No one, and I'm going to look at the chat now, but no one, and I mean literally no one, looks at this and says this is a bullish looking chart, right? And let me know in the chat, do you agree? Does this look like a bullish chart or a bearish chart? Does it look good or bad? YOLO long? Yeah, but it's YOLO because it doesn't look good, does it? And there's a point to this. Looks bad, right? In the traditional sense, this does not look good, right? We're closing below support. We're down really big. This is really bearish. The market's crashing, right? That's a support. Well, if it's support, you're below it. So what is it now? Right? Any traditional analyst, they're not going to say this is a good looking chart. In fact, we wouldn't say this is a good looking chart because no one's buying this week. It's a sell. Now, in one bar, that changes. This is now the most bullish looking chart we have. If this week is green, because we know threes exist. Yeah, they would tell you it's definitely a bearish looking chart, right? And the reason this happens is because of what we call crowded trades. You can see the reclaim level is down here, gap down, and they reclaimed it right there, and it goes ripping, right? This is because of crowded trades. When we look at this chart, what you have to realize is you're looking at historical transaction data. So historical transaction data, what are we seeing here? What did they do from February to the end of March? Sold, right? They sold. So what's the transaction data showing you? They're all short or they all sold. So you have two groups. You have what we would say is buyers. And then what we would say is short sellers. These are the two groups you're working with. But buyers can be sellers, short sellers can be buyers. And this is how it works. When the market's going up, the buyers are taking the offer, right? Market's going up. They're willing to pay higher prices. And when the market's going up, these short sellers, it goes down a little bit. Maybe they short a little and then they just get taken out. So if we look, right? They're buying, they stop out some longs. So there's some profit taking of longs and short selling. Then the buyer comes back, destroyed. Then short sellers in here, profit taking of the longs, and then those sellers get destroyed. Then the sellers here, and then they get destroyed. So what's happening is as we get to all-time highs, if we think about it, let's go to like a quarterly chart. If you were a short seller from, you can see pretty much October 2022 to 24, if you're a short seller, you're pretty much not in the market. Right? You've been getting obliterated for the past, couple years at that point. So when the market goes down like this, what's happening? The buyers are selling. They're forced to exit their positions. Because imagine you bought at 6,057 and then prices hit 5,600. You're getting out of that. You're not sticking around. At the same time, short sellers are selling. So we have the seller selling, we have the buyer selling. That's why this is faster on the downside. Because you have all these buyers who are like, all right, this is a good time to get out. And that's what happens. Then, when this starts firming up here, what's happening? The buyers are coming back to try and buy more after getting out. So you can think like, imagine there's a billion shares worth of buyers out there, just random number. They buy for 3 years and then they have all their shares long. Comes back in, everyone's getting out. They're like, the market's crashing. I'm going to defend the downside. I'm going to hedge. I'm going to get out. I'm going to reduce my positions, whatever they're doing. Once the market firms up, now those buyers who've been waiting to get back in, now they can start trying to get back in. And when that happens, the buyers are buying, and now the short sellers are forced to buy as well. So the sellers are buying and the buyers are buying because everyone is short and it starts coming back. Now they have to get out. And this is what we would call crowded trades. So to really just paint the picture clear, imagine you have a stock that looks like this on a yearly chart, right? Eventually, the last guys that are going to buy this stock, they buy, and then it starts profit taking the other way. And almost every chart has done this. But you'll start to see it when we look then at the market. So let's just see. We're not going to go to here. Let's go to look at what 2008 looked like, just understanding the broadening formation. What happened? Well, you can see here, 3 on the quarter. So there's your broadening formation. Top tick, boom, all the way back down. And then they actually expanded. They kept going. You'll see it gets bigger. And they make the new lows and they reverse. So they're coming all the way back through to the top of this broadening formation right here. Then they make the new high. And this is 2008. So what happened in 2007 to set up 2008? 3, there's your broadening formation on the quarter. Top tick to the penny, goes 20 points higher. Then 900 points the other way. And then where does it go? Slightly lower, right? So what in 2008, what happened? Crowded long position. Everyone's long. Anyone short in here, they're pretty much gone. The 3, 2, 2 times the top, all the way back through. Everyone that's long forced to take profit. And then everyone is short, right? The short sellers are in here and the buyers are sidelined. Once the market firms up and starts reclaiming, short covering starts to happen. The buyers start to step back into the market, and there's your big broadening formation. New highs, new lows, new highs, new lows, 2008, and then off they go. And it expands, getting bigger. If we go to COVID, 2020, you're not going to see a 3 here on the quarter, but you'll see this broadening formation. They tick down, they tick up, and then 3, there it is. Draw it out. You'll see how they reclaim this low, and that forces short covering, and the buyers step back in, which is what all this stuff is. And the way we time it with time is right there. When that quarter is green, that's when you know for sure that's going the other way. So we're going to see this everywhere on all time frames. So if we look at the US 500 here, notice it went 8 points above the previous year's highs, and then it rejects 1,300 points lower. And then you'll see it goes 170 points below previous year's lows. And then that was the rally into here, 3,300 points higher. And if we look at this year, it is so obvious now to you. It goes 69 points higher, it rejects and goes 400 points lower. So the bigger move is almost always the rejection of the broadening formation. Now to fully round this out, by using scanners, we can find the broadening formation. There's no need to guess. So if we go to last month, these were all the 3s. These are all your broadening formations last month. Look at how much these guys are up. These are up pretty good. So these would be those broadening formations that broke out. If we go to circle, you can see in this case, the 3 breaks out and up they go into the next target at 125. We go to SEDG. We'll see the previous 3 in here. Might make it more obvious to you. So notice what happens. 3, they go $2 lower, and then all the way the other way, 23 points. Pretty good. Now, if we look in here, this was a 3 last month. So what did they do? Let's go to the week. Clear that out. We'll see this is the 3 from last month. Something like this. So they go up. And let's see. Let me just double check. Yeah, so that's February 26. Yeah, so right in here, this is the beginning of this month in March. What did they do? This is the weekly. 3 goes up above it. You can see $4 higher, and then all the way to the other side, $8. That's a good trade. And then it goes 67 cents lower than the 3. Boom, 21 points higher. So just understanding 3s are broadening formations, we don't have to guess. And you can align, right, this slight lower low on the week. You can align that slight lower low to cause things to happen. So when we look at big time frames, let's go to ARK, for example. I'm just trying to show you guys as many examples so you can see how this works. This is the last one before we look at some questions, and then we're going to end off the stream this morning. But ARK, 3 on the year. We've all agreed, right? And this is the beauty in it. We've all agreed, by the way, while we were talking, SPY, look at what SPY's doing. Reversing the 30, what's this doing on the 60? It went 28 cents lower, boom, $2.62 the other way. So what's happening? These shorts are being forced to cover, and there's a buyer in here. Someone's buying. SPY reversed, Qs did, Dow did. Now what we'll notice is they already hit their targets. So it could just be stopping guys out. Depends if they stay up or not. Looks like we might have some news. So here's the news. 3. There's your broadening formation right here on the 5-minute. So you can see before news, what did they do? They made slightly lower lows, slightly higher highs, and then here it is. How are we going to get out of that? And I want to get back to ARK, but for now, see, this is inside bar, but it is trying to come back through this. Now though, so if we go to ARK, 3 on the year, breakout traders get what they want, 22 bucks higher, and then boom, 100 points the other way. And the low of this 3, it goes $3 lower, and then boom, 60 points the other way. That's about as easy as it gets. Now, once you know those levels are there, though, you can time the levels by understanding 3s exist. So like when this month goes up above last month's highs and then starts coming back in, you can time it, trying to short sell it against previous month's highs as you come back in. You can time that to go back into the yearly range, which is this level here. You can time retests of that yearly level here, right? And then once you've created a position, you can wait and you can add to it, or you can hold it. You can exit it for a profit. You can do whatever you want. But if you know that it's trying to do this, makes it a lot easier to understand what you should do. Should create a position and then ideally hold it. So to show you, let me show you an example from, we'll do it from this week on Tuesday. So if we look at Tuesday, for example, so it's inside bar Monday, goes up Tuesday. Once it comes back in, this is how you could do it. You could literally go like this, risking the 2, and you're trying to make the broadening formation, which is 11. If we just understood that, we're good. You're good to go, right? You can do that on any time frame. Now, the other thing we can do is we can use intraday timeframes to time the daily time frame. So if we look at this, when this reverses here, you can time that. When this reverses here, we can time that using 2-2 reversals. So we can short it here and put our stop against high day. Very small risk. Or we can short it here, putting our stop against this or the bar we enter on. The biggest, most important thing is that we aren't going super wide stops. We don't want to go in there and risk, 10% of our account on an entry, because we don't need to. If we know where price should go quickly and instantly, we don't have to do that. And if you just go into this live stream, and I pointed this out very specifically for you guys, this morning we had the good morning triangle. Knowing what you know now, what did we do to the morning highs, right? 12 cents higher, short, right? $5 the other way. That's good stuff. Now, you didn't have to be first in either, because we pointed out the retest right here. We'll see the broadening formation starts to play out. Slightly higher. Look at this. 12 cents higher, and then boom, the other way, $2. We can do that all day on whatever stock you want to do. The more volatile the moves or the stocks are, the better. Like oil, for example. If we look at oil this week, and this is why we do multiple time frame analysis, notice how it's not rejecting the highs or lows of last week. It's also not doing anything. Inside week, doing nothing. So this is gonna be a much smaller range. It's still big, it's 10%, but it's much smaller. See how it's contracting. And what's happening is not a pennant. Most people or most traders, they would draw it out like this and say it's a contracting range. No, it is broadening because it's a 3. So by definition, it can't be a pennant. It's a broadening range. And what you'll notice is the smaller the range is due to the fact of having less people crowded in one side of the trade, you're less likely to make the new low and the new high. What you're more likely to do is keep testing both sides until you can make those new highs and new lows. Just normally takes a while. So we don't want to trade the small ones. We want the big ones, the big boys. So we go to like Roblox on the quarter. You want this. You can see this is something we discussed last year. For the pedophiles, get rid of them. But here it is, outside quarter. So right here, goes down below that. And then right here, 71 bucks. Where's it going? 140. There it is. And then 140. They go $9 higher and then reject. Boom. 86 points lower. Right? So understanding threes exist. And now we'll take some questions. So you find the most current 3. You want to find the biggest one. So if we go to like the defense sector, for example, you can do this on a yearly. You can do it on whatever time frame. You just want to know 3s exist. So this would be the outside year, right? So it went up, then down, and then back up again, like this. Now, if we look at this year, 3, it did go up, and then it came back. So defense, they might be in a little bit of trouble here. We'll see. But every time frame matters. That's the very important part. When we're doing this, of course, if you're timing the broadening formation, that's the minimum requirement. Minimum requirement is broadening formation plus a signal or a reversal. So whenever you see our cheat sheet, and I'll take a look, I see some other questions. I just wanted to share this to you guys quick. So when you see our cheat sheet, this cheat sheet is designed to show you what broadening formations look like before they happen. So we look at this, the 2-2 reversal. This causes a broadening formation like this. This is your 3. But you'll see it happens in 2 bars instead of 1, which means we can slot ourselves right in the middle of it. We can find that it's happening, and then the next day opens, we're like, all right, let's get in that one before it becomes a 3. So all of our signals are meant to do that. Besides momentum signals, there's continuation. But when you look at these signal lists, you want to time them with the broadening formation. So like if uranium was going to play out today, we would have had this daily signal above yesterday's highs. If it stayed up there, back through this gigantic range of 10 points. But you'll see today, they went 16 cents higher and then boom, $1.74 the other way, which is why we don't want to have wide stops. If you buy it, it goes 16 cents and it comes the other way. It could go 10 bucks. It could go 100 bucks. Who knows? There's no reason to have a $5, $10, $20 stop on that. Defense, we'll see. Well, if we look at defense, this is the monthly. Do you see how it's already a broadening formation? So now we don't know. And that's actually a really important question. So his question is, why is defense not a short here? If you're short, if you're already short, you're good. It's never not a short, not a long. When it comes to broadening formations, like if you're at the bottom of the broadening formation, we prefer to buy it unless it stays outside of it. So like we talked about before, they broaden over time. So eventually, right, it goes like this, retests it, and then they're gone. So eventually this happens, right? So if we take signals and they don't work, get out. If you take a signal and it does work, see how far it can go. So when we look at defense, there's nothing we can do down here unless we want to short into the bottom of the broadening formation on the month. So what we'd want to do is short at the top of a broadening formation, which if we go on the 60 minute, if we were dying to short defense, we'd want to see it go up first and then back down, because we can time it properly then, versus just shorting new low a day. It's like, probably not going to work out very well. So it's always like the higher time frame, you use it to be like, okay, what's the big picture here? Like if we go to SPY this year, right? What's the big picture this year? Doesn't look too good for them, right? That's big picture. So if we know that, do we have high evidence to be short when this 3 happens and then it comes back below it, back tests it, right? Do we have high evidence to short it up in here? Yes. What about here? Do we have high evidence? Yes. Because we have evidence today when that sets up, we come back into the 3 and this year. So we're confirming it across multiple timeframes. Give us 2022 repeat. See, I think I might be wrong, but I don't think we're going to get it. I think maybe we get like the previous year open a little lower. I want to see it. Like if we look at this quarterly, look at this 3 quarter, that mattered, right? Ticks down all the way 3 again, and then up here, coming back in again. So if you're in defense, you'd still stay long as it's above the yearly open, or maybe flip short once below. It depends how you're managing your position. If you're a yearly position trader, if you're playing with 3s, once again, right? If we go a penny above a 3 and then back in, it's going the other way. So if we look at defense, if you were a yearly buyer and you bought it, let's say you bought it at $70, or if you bought it at 75, or you bought it at 79, it goes from 79 to nearly $100 and then comes all the way back to 79. Right? We shouldn't stick around that. Why? Because if we're a 3-2 trader, we should still be long MU. We should be in this one and it never came back. We want to keep adding to this one, would be the idea. Because this, right, it's still good. We can still be long that. Or, you know, for a 3-2 trader, we want to be on the things that are going. So if you take an entry, since we know broadening formations exist, if you're like, yeah, this looks like a really good chart, right? And you buy it and it works, you're like, yeah, perfect. That's the most bullish looking chart ever. I love that. And then it goes like this, get out. Didn't work. That's it. Break even stops. Didn't work. Now, if it re-breaks, all right, it's back to a good looking chart. Get back in. It works. Yay, it worked. Right? There's no reason to widen the stop, risk a ton of money. None at all, especially if you can't make money to begin with. Like, imagine if your friend came to you, the one that like has been working at Starbucks for the past 5 years, haven't figured anything out. He's like, yeah, I just got a loan out for $100,000. I'm thinking of doing some crypto investing. Wouldn't you be like, what the heck are you talking about? Like, you don't know what you're doing. Why would you even take a loan in the first place? Like, start with $500 first. Same thing here, right? Why would you go and risk a ton of money if you're not winning? Once you're winning, you can risk all you want. Like Rob would say, once you get the winner, casino is open for business. Because if I'm up $1,000 and there's another signal to add, I can risk $800 on the ad. And if it works, you make 10,000. If it doesn't, you're back to break even for the day. So once you get a winner, then the casino's open. You're good to go. But you have to get the winner. It's like today on SPY, right? If you played the good morning triangle and you shorted it in here, killed it. I don't want to say it, but if you kill it in here, let's say you get out of it. When this goes to down to up, so the slight triangle they out, so slight stopping them out, and then it breaks here, you can risk more on this ad just because you already made money. Because if a stock's going to go down 10% on the day, it has to go 5% first. So like if we look at FedEx, if FedEx is going to open and go outside weak again, it has to go halfway there first, right? Just logically speaking. So if we create positions at the top of the range and we make a lot of money and it hasn't hit the other side, it could still go to the other side. You can add to it still. You can risk their money. IBM. So IBM was continuation 30. And if we go to IBM, again with this mother bar stuff, can you see where you would want to time the short if you were going to be playing this week? Would have been up there. We go to the day. This was last week's highs. They go slightly higher and then start coming back in. And notice how we had an outside 60 minute right there. So this one outside bar, if we go to like a 5 minute, you can see this. Down, then up, last week's highs, and then all the way back down again. So you get that one at last week's highs, and then you're trying to time another one. Up in here, boom, acts as resistance. You're good, right? If you got it up in there. Then you're trying to time more. 3 right here. Slightly higher, that's a good short right there. Then cover. Then you can see lower highs. So if we look at this, you could call that retest of the 3 right there, if you want to. But then all the way back down again. And then here. Goes up, slightly higher highs, and then all the way back down again. Now it's grinding out the lows. So would we want to add down here? Add, sure, right? You can add, but we don't want to enter into new lows. Like the picture perfect, what are we looking for? Like we want this. 3. 2-2 reversal, entry. Hammer, add, get more. The 2 down, 2 up reversal as a 2-2-2. Buy more, get more. Target gets reached. Right? So it's like enter, we don't want it to come back. Add, we don't want it to come back. 2-2 reversal right here. We don't want it to come back to our entry. This is what we want. So when we look at IBM, is this going to be really good to add down into here? No, not really. No. It's not going anywhere this month. So if you're going to add, you'd want to add next month if that breaks last month's lows. $20 ticks on MES. So this is what I would suggest. You need to find the big broadening formations. It's not about time frame. It's about knowing where to time your entries and why. So, for example, this week, so it's Friday, 3. This is Sunday's trading. And most people are like, oh, you can't trade on the weekend, or it doesn't matter. Just broadening formation. 8 points lower, and then all the way to the other side of this big 3, right? That's really, really clear. If we agreed, which we did, 3s are broadening formations. So if that's true, that's really, really clear that we should be buying when it rejects here. Then, right, you can also try and short it up in here. Now the thing to understand, see how the green bar here, the 12-hour in this case, see how it's green? We need that to be green in our favor to buy it. Notice if you're buying when this is red here, you're probably not making much money. And then it goes green here, now it works. And it's green here, now it works. Then it's red here, now what? Well, this is the top of the broadening formation. So when that goes red, now that's changing what's going on. All the way back to the bottom, to the penny, right there. And then you'll see it down. They tried to come back in, so this just wouldn't have worked if you're trying to buy anything back through this. Then inside and then back down. But to show you, so this is what it looks like before anything happens. So let's go to the 15-minute and just see what that looks like. You'll see the series, new highs, new lows, new highs, new lows, new highs. And what do? What did they do? New highs, slightly higher, all the way the other way. And where's it trying to go? Right, all the way through here. Now, even if we miss that, and if we miss the initial one, since we know broadening formations exist, you just have to time one. You just got to find one and make it work. So for example, in here, if you're trying to time this 3 to get in that, it could be as simple I was trying to, you know, it was nice tight stop. Now this is 13 points. This is a little wider than we'd prefer. But something like this, it's like you can get in that way. You can get in with the 3 over here. Just make it really easy. 3 goes up, comes back in. You can get in that way. Because you know where it's trying to go. If we know it's trying to go down there, then we can do that. But we have to know where it's trying to go with the broadening formation. Hard time finding broadening formations. I've already shown you so many times. Look at, if we go here. Do you see how this 3 is a broadening formation? You found it. We're good to go. You found it. You don't have to guess. 3s are broadening formations. So you can draw it out and you can say this is for sure. That's a broadening formation. Every time. But you want to train your eyes to see them. Because not every single one is an outside bar, like a 3. Some of them may be compound outside bars. So for example, 3, that's a broadening formation, draw it out right there, buy it down there, sell it up there. Beautiful. But these 2 bars are a 3 to these 2 bars. So that's a 3 as well. These 3 bars, that is a 3 to these 2 bars. So the 3 is just, it's how it works. It's going to be everywhere. But like we said, if you scan for just 3s, you can do very, very fine just doing that. You just got to remember this pattern that you're like, I need to find the pattern, Alex. I need to find the pattern. This pattern is a 3. So find the 3, you find the pattern. You don't have to search for the pattern. This is just simple strat numbers. Different broadening formation, different time frames. Which one's important? So this is what people don't seem to understand. Not you specifically. But when you look at a chart, notice how all the bars to the left, see how these are all closed. They're not trading anymore. What does that mean? On a 60-minute chart, the current bar that's open is the only bar that matters. Because if we're going to buy right now, like if I were to go in there and let's say I buy 1 million shares of SPY, where is that order going? Like that transaction data, where is it going to go? 60-minute chart. Right now. Is it going to change a historical bar? No. So the 60-minute shows you right now, right? Just 1 bar. That's all you need. The day shows you today. So what are they doing today? They're selling today. The week shows you what they did this week. They're selling this week. Destroyed. And notice, this was that outside day being reclaimed, I believe. I think. Yes. Yeah, let me just make sure we're good here. So you can see the reclaim of that outside day changed the week to red, causing the weekly seller to sell this week. Boom. We go to the month. What are they doing this month? Selling. Where are they doing that? Below 678.70, that was a sell. They're selling. Because what you have to understand, candlesticks, you can think of them as time, right? So an aggregation, an amount of time for orders to be placed. That's all a candlestick is. So if we have a month for orders to be placed, this will show those orders. So what does it look like if we're going to buy this month? It would look like this. Goes down maybe a little bit. Boom. Where did they start buying? Right here. Where did they stop buying? Right there. This would be the month. And then if they're buying this month, the only way that happens is if the week, right? The weekly chart looks like this because they have to buy this month and this week. Each week of the month, if it's going to really go. And then during each week, right, you're going to have multiple daily bars, which is where you're going to get those broadening formations in the direction of that bigger stuff. So if you're scanning, the radar watch list gives you all the outside days. So that's one way to find them. If you go to the scanner page, we can find the C1. These would be all the threes from last year, all the threes from last quarter, all the threes from last month, all the threes from last week, all the threes from yesterday. And then these are all the threes on the previous 30, right? This is C1. If you're looking for threes right now, it'd be CC, current candle. So we go to the 60 minute. These would be all your threes right now, right? Not very many. Let's go and take a look. Let's do a little bit of broadening formation fun. Hymns, closer to the 2-2 day, did not have a 3 though, so it might have been a false tick. So for example, Jeff, right? So you can find this 3, that's a broadening formation. And then if we look now, it's very small, so we're not trading this, but 3, 1, it's trying to reverse and go back up there. NWS. Yeah, it looks like the 60s, we're not having a lot of them. Let's look at yesterday's 3s. Syndax Pharmaceuticals. It's a cool one. You can see 3s are signals, so 3s can also break out like signals in this way. New low, new high, and then it breaks out of that range going like this. And because that happens, that's why we have to time the entry. We can't just be like, oh, there's a 3, I'm going to short, or I'm going to long. We have to time it. Because if it was going down today, the 60 would have had to be red, and it was not red at all today. So it's not going down. So if we look in the morning, you can see 3 on the 5 minute they bought, and then 2 they kept buying, and that expanded the range versus coming back through it. Now, if you want to see the ones that came back through, here's some examples. AAOI. Notice the only way this could have happened is if it went red on the day. If it was green on the day, it would have been expanding higher. So it's very important to understand that. But you can see this morning, there's your 3 lower lows, your higher highs, and then slightly higher, penny higher than yesterday's highs. And this would be the smaller broadening formation or the sub. So if we go like a 2 minute or something, you might see it clearer. High, low, new high, boom, destroyed. And you can see, how do you time that? There's a 3 in there that would have been really fast. The top of this 3, right? This 3 happened, and then it went all the way back down. The top of this 3, right? They're always just rejecting. Yeah, so full time frame continuity, what it tells you is price is for sure going up or down. So you can think of it like this. If the monthly participant is buying this month, so like if we go to Circle, if this month is green, anytime it was above 80 bucks, 80 cents, the buyer this month is more aggressive. So that's the monthly group, monthly participant, they're buying this month. If the week is green, that monthly buyer is also buying this week. So they're buying this month and this week. Anytime the day is green, that monthly buyer is buying today. So they bought it here Monday, they bought it Tuesday, Wednesday, Thursday. There was some profit taking. Then they bought it Monday again, Tuesday again, and then there was some selling Wednesday. Then they bought some Thursday, a little bit of, poorly timed short positions potentially here. And then they came back this week and they bought Monday, Tuesday, Wednesday, Thursday, and Friday. So this monthly buyer has been buying almost all month. Notice you had one red bar here, one red bar here, one here, one here. So you had 4 days where the seller was more aggressive. The monthly buyer was just demolishing these guys. So when everything aligns, if the month, the week, the day, the 60, if they're all green, it shows you the monthly buyer is there right now and today and this week. So if we go to right now on Circle, this would be full time frame continuity. And it's really easy to check. You just go like this. month, week, day, 60-minute. And again, we don't need that much historical data. So we can show on the month that we have targets up in here and left, like this. But if we just look at the current bar, turn this crap off here. So if we just look at the current bars on this chart, it shows you exactly what algorithms are doing. They're buying right now on the 60-minute as a 212 to the upside. They're buying today as a 2-2 reversal to the upside today. They're buying this week and they're buying this month. So the monthly buyer is here this week, and that buyer is here today, and that buyer is here right now. So at this point, we have no evidence of a seller, zero. So price must be going up this month, this week, today, and right now. It must be going higher. The only thing someone could say is it might turn around. And we agree. If this doesn't stay above the previous 60s high, it might turn around as a 3 since outside bars exist. But at this point, we have no evidence to say it is turning around. So when we have this true, where we know for sure, right, it is going up at this point. If we align that into a monthly broadening formation, then we know for sure price is going up and we know where it's going. So here's uraniums, for example. Pull the quarter up, I think, give you the 3 to work with. Not quite. And this is why it's not about finding the 3s. It's about knowing where those broadening formations are, but the 3s are like the cheat code. So you can see on a 4-month chart, this 3 is a lot more obvious. They went 33 cents higher and they went $3 lower, and they went a lot the other way. So we'll see that broadening range on the monthly. 3, see this? 3, slightly up, back down, slightly down, back up, back down, back up, back down, back up. Boom, right? Gone. There's your breakout. So when we look at uraniums, let's see what happened. We're going to stay zoomed in. We're just going to show you the day, the 60, the week, and the month. So how did uraniums form this low? Notice the monthly seller, the weekly seller, they were selling. And you can see that daily buyer tried to come back around 20 bucks as a 3 on the day. You can see the week went green, the day went green, 3, 1, 2 up on the day. If we go to the 60, you'll see that anytime the 60 is green, the day is green, the week is green, whoever was selling this month is gone, as far as we understand. And then you'll see they continue, inside day up, up, continue, continue. So the weekly buyer showed up here, that monthly seller was gone during the week of April 7th. And then anytime this week is green, that would be that buyer trying to come back. And you'll see the broadening formation in here starting on the 60, like this. So they're testing both sides. There's the outside day, which is a broadening formation, like so. So that will grow over time. And sadly, let's see. But you can see how this 60-minute broadening formation, they test the lows and then they test the highs again. And eventually you get out of that. So if we get outside of this broadening formation, what we would say is that's the direction we're going, right? It's a breakout in similar ways to how most people would understand that. So if we look at this, do you see how it broke out and then acted as support here? That's breaking out. What's it breaking out of? This 3, which is a broadening formation. Where's it going? The monthly broadening formation is going to 50% higher. So we went $3 below. We're trying to go $11 higher. Then you'll see once the new month opens up, it's a reversal on the month to the upside. Now, this was not just URA. Look at this, CCJ. And let me, I don't know if the replay just got bugged up. It's a shame. But it was not just URA, but CCJ. If we go there, this is uranium company. Same thing. So you see the lower low, hammer, boom, CCJ. We go to UEC, 3. Look at that, 3 on the month. What is it perfectly timed? 21 cents lower. Right? 21 cents to make like 10 bucks. That's pretty good. Uranium miners, URNM. You can see this one. So make some really big lower lows. Let's see the 3 here. 3 up above it, back below it, back above right here at 37 bucks. Boom, 80 bucks. Right? And it also goes to the top of this triangle perfectly. So you're gonna see, we want to align the big time frame, like a monthly, quarterly, yearly, back through a range of people who are short. So if we go to OIH to leave you guys with something we've been discussing this whole year, here it is. OIH, you'll see it retested the break, taking the previous highs, but they're still up there. So it's expansion or breakout. Now, if we go to the year, what's going on this year? This really is going to matter. This is a 3 on the year. That's a broadening formation. What does price do? Well, it goes a little below, in this case, 340 points lower. Then a lot the other direction, right? So this has a range to go 1,100 points in OIH. All year, we'll see if that kicks in, but it has to be above this 3 at 406. If we go to XOP, this one's really clean too, right here. There's your 3 right here on the year, and then here's another 3. So we're above this at 92, trying to go to 340. And then we're back above this at 168.16, trying to go to 340. And then we have the yearly reversal that's doing that. Yeah, there's no cup and handle necessary. But let me show you XLE as well. So look at energies, XLE. Was this not clear? Where was this going? Look at that. 3, 2008. 72 cents lower, boom, 31 bucks higher. And then goes $5 higher, boom, 34 points lower. You'll see it goes 7 points lower, boom, 41 points higher. We timed that at the beginning of the year, 47.49 or 47.41, right up into the top of this. So now, if they're going to take profit on energies or reduce, maybe it's a crowded position. We take everyone out and then we can keep going. Right? Maybe. We'll have to see. Now, if we were going to time that, though, we'd probably want a monthly seller in our favor. Month is green. At best, or at worst, maybe a weekly seller would probably be the first one, or would be the first one to show up if they were going to sell next week. And I want to show you on SPY right now. What did SPY do on the 5-minute? So some type of news came out, maybe, not sure. 3, slightly lower, back in. So you buy it down here, ideally timing it below the low, goes up $2 the other way. Even though these ranges are tiny, it's still going to happen because it's what price, it's the third thing price does. So if I trade based on the weekly, day, 4-hour chart, should I start drawing broadening formations on the weekly? Yes. And the 4-hour, and yes, all of them. I make it look easy. It is 3 broadening formation. Price wants to go back through it. That's the video. It seems so simple, but it's just because of how price works. You just have to realize you're trading against other people. So if the price drops 50% and everyone's short, and then it reverses with a signal, those shorts got to cover. Oxy, let's see it. Get, boy. Get. So look at Oxy. Is this not, guys, I'm telling you, this is going to set you free from all of your mess if you are listening. You see the 3 on here, Oxy? That's a broadening formation. Goes down. The yearly buyer shows up at 41.24, $61 now, 20 points higher. Beautiful. And we already know it's still trying to go up there, 71 bucks. And then if we look left, right, we have more 3s here and here. So if we actually used our magnitude reclaim, this indicator shows you the target. It's going up there. Shows you exactly where it's trying to go. Like OIH, you're going to see, since it's not reclaiming yet, it's technically not doing it yet. Now if we go to the 6-month chart, up there. Because this knows high, new low, it's trying to do that. And obviously each time frame will have different ones. So if you're ever going to use this, you just want to be aware of that. But just scanning for 3s is the easy stuff. What 3s do you like to trade if you had to choose one time frame while looking at a higher time frame? All of them? I mean, it depends on what type of trader you're going to be. Are you investing? Then you should probably be looking at yearly charts. You day trading? Probably have like a weekly watch list. And then each day you might have focus on different names within that watch list. Because what you have to realize, like we said before, the current bar, this is the only live bar, right? So this is the only thing that matters. If it's red and you're buying, you're going to lose. If it's green and you're selling, you're probably going to lose. Now you can time things on lower time frames. And you'll see the 3 right here. They're about to complete it. Tick down, back in. They're close. But you have to have the time frame in your favor. Like I can't short this 5-minute. It's going up. But maybe I could use this reversal on a 15-second to try and time it to change. Right? Like 3, 3, 3 ticks up. Maybe I could try and change that. But then it's a 15-second trade. I only have 15 seconds for this to go to the other side of this 3. That's 6:53.24. And you can see we did it, right? Timed it. Now what? It only lasts 15 seconds. How are you going to hold this short if you don't have a weekly signal to going down? If you don't have it downtrending this month or today or right now on the 60-minute? Like, how are we supposed to hold it if it's not going down? You can't. So if you have a bigger time frame trend and you time your entries into it properly, you can hold the position, even if it's a 5-minute entry. But if you don't have the bigger time frame and you're just zoomed in on lower time frame stuff, this 15-second trade is 1 bar and then you get out because it lasts 15 seconds. It doesn't last the whole day. Month, week, day, and 60-minute. Like, so once you understand, so think this way, ready? So if we understand broadening formations are 3s, right? If we're going to get a 3, it's going to go up and then it's going to go the other way and become a 3. So if this was a weekly chart, let's say we had a weekly 3 last week. What would the daily chart look like? So if the end of the week is going to look like this, what would the daily chart look like? It might look something like this. It goes down Monday, comes back. Tuesday reverses. Wednesday follows through. Thursday, maybe some profit taking. Friday, they follow through. So we can see our entries will be occurring Monday, Tuesday, if we know 3s exist. So when we go to SPY, it wasn't an outside week, but we call it Turnaround Tuesday. Is the second day of the week, we gain evidence where the day and the week opens become separate opens. Because Monday, the day and week opens are like this. They are the same. Tuesday opens, boom, separate daily open. So when that happens, that's when you can get outside weeks to occur. The same thing's true. The second 60-minute of the day, the second week of the month, the second month of the year. All of these things are how you time 3s. So for example, SPY. If SPY was going to go outside bar this year, it might occur as a reversal on the second month of the year, right, guys? So the first month of the year, January, they go up. The second month, they reverse. Oh, that's how 3s happen. What are they doing? They're about to become an outside quarter. They reversed on the second month of the quarter. Right? What about in here? Remember last year when they bottomed? So you got the 3 on the quarter and then all the way back up. This is the first month of the quarter, April 2025. The second month of the quarter, there's your reversal, there's your 3. Right? So if we understand 3s, we know where to time our entries and why. Because we want to do it on the second blank, second 5 minute of the 60, second day of the week, second week of the month, second month of the quarter, second month of the year. That's when you want to time it. So if we go, we're about 20 days through the month. If we go, we look at our calendar. So this is the 3rd week. Let's go to, we'll just go to the end of the last week. So these would be things that went up the first week of the month and then reversed on the second, okay? So we copy that list. If we go to the month, we keep that list. So I'm going to copy it quick. Keep that list. We got 160 names that reversed on the second week of the month. So how many of those had 3s last month? These would be all the 3s that were last month. Then how many of those were going outside bar to the downside? It'd be these ones, because these were going up on the month, but they reversed on the second week. So OMC, SBAC, New York Times, Netflix. Let's just take a look and see what happened. OMC. So this is the first week of March. Reversal. Boom. 83 bucks, 75 now. And you can see where it's going. Right? Go to the month. By understanding the 3 scenarios, we can scan for exactly what you're looking for. 3, and then it reversed on the second week of the month. That's a short every time. Now, it doesn't mean it works every time, right? But when it does work, you know exactly where it's going. And you know to use a tight stop. So from here to here, right? What about SBAC? Oh, ouch. First week of the month goes up. What did it do? Well, last month was a 3, guys, wasn't it? So if we can mark it horizontal, do it however you want. Oops. There it is, slightly higher. Again, $1.67 higher. Boom, 31 points the other way. The reversal on the second week of the month was at 192 with a magnitude to go down to 177. New York Times. So here's an example of one that didn't work. And it'll happen, that's okay. Let's see what happened. 3 goes up the first week. The second week goes 16 cents lower and then comes back in. Get out, didn't work, get out. What else do you do then? You can go long this week above last week's highs and see if you can make it back. That's one thing you could do. Or you could just say, screw it, I'm done. I'm not going to do that. Right? Now Netflix. Outside month last month. There's a 3. Second week of the month. Reversal here. 95.26. It's down 5%. Where's it going though? I'm just trying to go lower. You still got a month left. You got 11 days. And if this works, what's it setting up for next month? The 2-2 reversal. Actually, the 3-2-2, which looks like this. Broadening formation, up, reversal on the second month instead of doing it the first month. Right? So we can see if we just time those weekly reversals, those were the only names on the list. There was THS, but that does not meet the criteria. So it's just a volume problem. But those are the only names on the list that reversed on the second week of the month after taking last month's highs. So those are the only things trying to go outside of an outside bar on the month. So that would have been your focus this month and you would have made some money. Yeah, 3s on the week, same thing. So let me show you how, again. So since it's Friday today, sometimes it takes a second here. All right, we're going to talk about this and then we're going to finish up the stream here. But if we go to the week, so 3 last week, there's all your broadening formations. Notice there's 91 of them. So everyone that's like, broadening formations are rare. If broadening formations were true, they'd be on everything at all times, all the time, blah, blah, blah. Everyone on Twitter says that. There's 91 of them. They exist. Okay. Copy the list. Oops. So copy the list. I'm going to get rid of anything that's still inside week. We're not going to mess with those. So we got 74 that are moving this week. Now, if we go to the threes, it doesn't look like we got any threes. I'm not sure if it would show the 3-3 until the end of the day on today. I'll have to check that after the close. But okay, this is the list of outside weeks from last week. So we'll just copy that. Let's go and let's scan Tuesday. Let's just see who reversed Tuesday after taking last week's highs. So go back to it. Confirm these are all the threes. We want to see a 3 that went up, right? And then we're going to copy that list. I'm showing you shorts because the market's been weak. These were all the 2-2 reversals on Tuesday to try and cause outside weeks to the downside. What do we see? Utilities, utilities. Notable, Intel, Cocoa, and IREX. All right. Let's see. These reversed on Tuesday with outside weeks last week. LNT, right there, Tuesday. 172.71. Where's it going, Alex? Down there. You see your 3 right in here? You go to the week. Is that not obvious? 3, gap it up, sell it. Down they go. Intel. So this was also on Tuesday. And you'll see, so this one worked, but that was it. The daily signal lasts 1 day. So it worked, then they went profit taking, and they probably took you out. Now today, with this 3, they gave you the chance to try and get back in. And we'll have to see. Maybe for next week, right? As a 3, 2 up, 2 down. Maybe. Cocoa. 3, 3 comes back in. That's a beautiful one. Look at this. 3 Friday, 2 up Monday, 2, 2 on a Tuesday, right there. 57.98. Now, it didn't go anywhere on day 1. Day 2, 2 again. Boom. Day 3, 2 again. Boom. Day 4, inside bar. So you got what you were looking for, right? They sold this thing 10%. That's pretty good. And what I want you to notice, guys, there's only 1, 2, 3. There's 5 names on this list, and so far they've all created a winning position. Because winning positions look like this. This is what they look like. We go to IREX. Here's an example. So you'll see we had, yeah, so this one was not a 3 during the previous week. Now you will see a previous 3. Now it's not really doing much. Doji, 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 doji. What we want to see, by the way, is long red and green bars. When you have long red and green bars, that's when stuff's really moving. When it's dojis, you prefer it to just keep reversing over and over. But regardless, 2 up Monday, 2 down Tuesday, 16% lower. That's a pretty good short. And if you covered when it reversed, you still made 7% at the 27.17 cover for today's morning session. ATO utilities. This one got wrecked. 2 up, 2 down on Tuesday, destroyed. 3 goes up, back the other way. So you can trade 2-2 on a Tuesday into previous 3s and only do that. You're going to trade reversals into broadening formations on the right day of the week. It's one thing you could do. And I've just shown you a million examples. Now we could look and see, is there any buyers that showed up? So if we go to outside months, this is just fun stuff. Let's go see. So we go to the things that are outside month. And you know what? Let me show you one more. But 3s, right? Reversals back into the 3s, that's something we look for. Here's another way you can do it. So we can look for inside bars instead of 3s. So last week was an inside bar. And then we can look for that to cause a 1-3. And it's going to happen pretty much the same way. So these are all the ones that really got wrecked. And I'm just going to show you these so you can see what winners are going to look like instead of going through a million timeframes, a million charts. HYMC, look at this. 1 goes slightly up. Boom. That's a broadening formation. Notice how it starts after the 1. Then you get the broadening formation. When did that happen? Notice this one happened the first week of the month. When did it happen during the first week of the month? Monday went up, Tuesday reversed down. So it reversed on the second day of the week, the second day of the month. And then it was slightly higher, but then the seller stuck around. So we can see the second day, second week, second everything, right? It matters. And you'll hear people commonly call stuff like this turnaround Tuesday. Tuesday turns things around, and this is why it happens. The broadening formation goes up in NEM, 77 cents, boom, 35 points the other way. You'll see this is Monday, so they gapped it up Monday and sold it right then and there, and then they followed through. And if you go to like a 2-day chart, you'll see the 3 here to time it. 3, and then back to the lows. They go. So XYZ 322 day. Let's see it. Yep. Isn't it really clear now? You should know exactly what you want to do now. Slight 3 cents lower. And yet people on Twitter, they're like, no, the wicks don't matter. It's like, did it? $3 higher. That is a, what? 3.25 divided by 0.3. It moved 108 times more to the upside than it did the downside. That's good stuff. And you'll see during the day, if you miss the initial one at the bottom, all you're looking for is those broadening formations to time it. Try and buy it here, make a little bit, comes back. Try and buy it here, make a little bit, never comes back. You're in. And if you didn't get that one right, lower lows, try and time it there, never comes back. You're in. And that's all you're doing. So if we go to SPY, you can still see the same thing is going on. It's just so freaking dang slow. Oh my goodness. 3, slightly lower, still just climbing their way back up. And then you'll see they restart. New 3 right there. So there's your new little oneer triangle. Do I do similar streams every day? Yeah, so we do have free videos. I don't know if they're actually going to come out or keep coming out into the near future, but we have free videos out every night where we discuss different setups. We point out 3s and whatnot as well. And then we do streams every day of the week, including Monday, Tuesday, Wednesday, Thursday, Friday. And then some weekends we will do streams as well. No, you use signals. You use signals. So if we go back to XYZ, the signals are what cause it. So unlike other traders who are like chasing it, we want to cause it. So here, let me show you the simplest signal we got. It looks like this. 2 down, so taking the previous bar's lows and going the other way, green. This is the simplest one we've got. So when you go to XYZ, how do you time it? You time that right there. See it? It tells you it's about to happen and then you buy it. Boom. Nope. There's no chopping up. You risk 2 cents, maybe 5 cents, and you make 60 cents. So risk 5 cents, make 60. That's good. Right here. There it is. 2 down in green. Maybe risk 5 cents. Boom. And it never comes back. That's what you're looking for. Another one you can use is the inside bar. Right? So bottom of the broadening formation, everyone's short. And then the signal breaks, everyone forced to cover. Boom. And notice they nearly go instantly when we're looking at this intraday stuff. Now, that's only going to work when things are moving, right? So when we go to like XLE today, remember when we told you guys 322, fun to say, fun to do XLE? Yeah, right there. Buy it, boom, off to the races. Never comes back. If we go to the 1 minute, see how it breaks and then just goes. This is why wide stops make no sense if you know the strat. 0 cents. It breaks and it just goes, if we're correct. Like this. 2 up in red right there. Gone. So you look for signals once you identify broadening formation. You can do it both ways. You can scan for the signal or you can look for the broadening formation and then wait for the signal. So like on a nightly basis, instead of going through and looking for a million broadening formations and then hoping signals show up, what we do is we go to our radar watch list, which is a simple way to do it. These would be all your 2 down and green from yesterday. So we can look at this and we can pick out, here's some stronger ones. Rocket Lab, Google's a little stronger, at least this year. ASTS, a little bit stronger, right? So we can look at this and see what's going on. But what we do is we find the signal and we're like, all right, let's go see what Palantir's up to. It's 2 down in green day. We're like, all right, 2 down in green day. Now, if we look at Palantir, still double inside week. So, nah. Inside week on a Friday, that's no fun. We go to HIMS. You'll see 2 down in green day. Same thing, though. Inside week. So that's better for next week. IREN. You see the 2 down in green. Is this at the bottom of a broadening formation? No. See, the week is red, so meh. Right, so we can go through the list and we can look at all the daily signals for today, and we can find where they're at within those broadening ranges. So like Marvell, at least it was coming off the bottom of the 3. It's a little better. If we go to the week, it's still an inside week, which is why it's not doing much. Google didn't go anywhere, didn't work. Right, and we can keep going through the list. Most of yesterday's setups just weren't that good. There wasn't much to talk about. And it's because you can see the SPY, they've just been pounding her. So until you can change it. As we get towards that, as we get towards the new 60-minute open, look at where we're at. Outside 15-minute, and we're almost right at the tippy top of it. So the question becomes, do we break out of that? Or do we reclaim that 654.16 level? Now, as we get to the end of the week, since you can see they've been selling all freaking week, all week, you can see we're right at the bottom of all this. So what we'd say is this week, everyone is short. So either those guys are going to take profit or they're going to keep on keeping on, right? Keep selling. Can't guarantee either way, but we just want to be aware. If they start reversing, they're profit taking all these shorts in here. If not, right, if we just tick up and reclaim, that seller's still here and we should see them follow through into the afternoon. That's what we would think. If we go back to that little 5-minute one, you can see this would be the small little one that they're working with. So how are we going to get out of this baby? You go to the 5-minute, you can see the 3, slight tick up, slightly back in. You still have an inside 60 on SPY. Let's see Qs. Qs, you can see actually made the slightly higher highs. So you can see all day, it's just been grinding. Till right here. Dow Jones stuck right in the middle. So you can see from this high to low day, right in the middle. How are we going to get out of there? You can see that little 3 on the SPY 5er kicks in the other way. CoreWeave. Let's see. Yeah, so CoreWeave 322, yes. Go to the week. Are they buying this week? Nope. Now, are they buying in general? Yeah, the buyers have control. Because this week is still technically an uptrend. So next week, right? Next week, maybe they firm things up and they start coming back above this. 84.50, this would be this. I don't know if you'll see it on a daily chart. We can start reclaiming that. Pivots on Qs make for a pivot machine gun opportunity. Yeah. Right here. So I pointed out, it's like it's grinding until right there. And you can see it's starting to come back through with a larger range. Because these little guys, these are longs coming off the lows and profit taking. Now this is trying to take those guys out. And you see the seller stepped up, so does it stay down? You'd want to stay below that 3 at 586.94. So below 586.94, it's expanding, trying to go to 584. The only thing is, when things happen matters, right? We've shown you turnaround Tuesday matters. Second week of the month matters. It all matters. So we look at the 60-minute. The new 60 opens in 2 minutes. That matters, because when things happen matters. So when we see this inside bar, we have a few options, a few things that could happen. We could have the 2-1-2 to the upside like this, signal target, right? We could also have the 1-3 to the downside against that inside bar as a rejection. This is always what we prefer. We want to see the 3. We could also see a 1-2-2, which is a 3, just in 2 bars like this, right? 2 bars instead of 1 bar. So once you have an inside bar, there's a few options. Either it breaks out or it reclaims. And you should be willing to do both whenever you're playing inside bars, just because we know that happens. We'll see IWM, double inside 60-minute. Dow Jones inside 60. Q's was a 2 up, and then SPY is inside. So if I had a triangle bet sound, let's see. What Rob would always do. Once you get all the inside 60s on the futures, you ring the triangle. Like, hey, we got a broadening formation coming. And you'll see if we have that inside 60, we can look at the 30-minute. That could be a rev strat to kick into the 60. That'd be interesting. Q's, you'd have the rev strat 30 as well. It's really tight range, so just aware of that. Maybe the Dow, it's a little stronger. And IWM would have the rev strat 30 as well. And the rev strat's cool because you have a lot of pivots you can take out if it kicks in. And if it's going to kick in, it'll happen in 30 seconds. So mind the flip is what we say, is the flip is when things happen. For Harambe, yeah. I wish I had a triangle so I could ring it. That'd be fun. But like we said always, right? The current bar is what matters. So what are they showing if the current bar is red? It would show us the daily seller, the weekly seller, the 60-minute seller is here. Anytime that's red. What could that do? It would cause rev strat. Now with rev strats, if everyone's selling and it breaks a rev strat, it's supposed to go relatively instantly. Because what you're doing is you're taking everyone that bought above that, and then right there they go into a loser. And since 3s exist, right, since broadening formations exist, you want it to break this level and just go. You don't want it to mess around. It should just go. Like imagine if I told you everyone's selling and there's a stop loss order for 100,000 shares to sell at 652.78. You'd be like, wow, when we hit that level, it should really puke. That's what you're doing. When you reverse, you're taking stops out with everyone selling, like this on SPY. Boom. Notice when does that happen? Right on the 60 flip. Right when the 60 opens. That's how you know. This is how you know. Now it still has not taken the 60 down, but notice if this is going to work, break even stop. It shouldn't come back. If it does stop you out, you could always get back in, but it should just go. There's no reason for it not to go. Everyone's selling. It's a rev strat. You have losers that have to stop out. It should just go. And where is it trying to go? Technically low day, and then that 650 level on SPY that we talked about this morning at the open. When you move your stop loss to break even, right when you're in a winner, because this is what you need to understand. What are we timing, right? We are timing the reclaim right here. So when this goes up and then comes back below that, short, and then it goes in your favor, break even right away. Shouldn't come back. If this is right, it should not come back. So if we're timing the short there, right, when we told you to, boom, shouldn't come back. Because if this is true, it shouldn't come back. It's trending down. And if it does, you have the best entry. If you short here and it comes back and stops you out, okay, get me back in. All right, boom, and then it doesn't come back. Perfect. We do battle. Unlike other traders who are scared to trade, we don't have to be scared to trade. Now, right now, you can see the oneer firms up very slightly. So let's say we're trading 0 DTE. Short, boom, instantly 50%. What you can do is 0 DTE, just because they expire, you reduce. So it's like you get 5 contracts here, you take 3 of them off when the market starts firming up, and then it guarantees a win. So you could either keep your stop at your entry like this, wherever that, I don't know where that level was, where you could try and keep your stop at your entry like this, or you could put it against like the 30-minute open or something, a little bit wider. But the goal is always make a winning position. If you can get the top or bottom of the broadening formation and enter the one that's going to work, you're in. And if it doesn't work, you're out. But you're not risking 60 points to make 60 points. You're risking like 3 points to make 100 points. So you don't have to be right every time. You just have to let the winner win. If you have one MES contract and the market drops 100 points, one MES contract, the market drops 100 points, that's $500. Right? You don't need a lot to make a lot if you know where the big move is. And the bigger move is always the broadening formation. Always. So right now we can see they sold it down. They're trying to make a lower high in here, but if we go to the 60-minute, we go back to SPY. See how the seller, they did come and show up here, but they were unable to take the 60 down. So that might just take you out. Boom, didn't work. Now what? Right now, inside 5. So technically this is still good. And if we look at the 30, we'll mark that out. You can see they just barely touch it. Do we stay below? Because this is our key level. If we're back above it, that's the reclaim. We do not want to be back above it. And I've been holding my short just since the open on SPY, up in here, off of this. So I'm not messing around in this stuff, but we still have 24 minutes to see if that can try to take the 60 down. And they're currently going inside 5 or so. They retraced, like we discussed this morning, the inside bar retraced, they retested pretty much to the penny, then stayed below. So we'd want to see what? Inside 5 down, so something we would call a continuation. 1, 2 down would be ideal. 2, 1, 2 down. And if they do that on the 5-minute, it confirms what the 30 is doing and maybe can trigger the 60 to do something for us. We go to the Qs. See right off the tippy top of the broadening formation. Not bad. Dow is still pretty firm. IWM. So IWM, you can see they took it down. Sellers were not strong enough. So right now, this one, we are what we consider stuck. And this is why outside bars or rev strats, 1, 3, they can happen because if you break an inside bar and the seller's not very interested in selling anymore, it gives the buyers the chance to try and come back the other way. So maybe that happens. Right now, it's, you can just see how much of a mess back and forth in here this is. We'd prefer low a day, but if they can't take that out, it's still chopping. You'll see the inside 5-minute on SPY. Now they're restarting like this. So this becomes the next question. Can we become a 2 on the 60 off of a little tiny baby broadening formation? Healthcares are still inside. Let's see. Technologies are still inside. Staples still inside. Financial still inside. And firm. Materials were a little bit weaker. Not really seeing much of the market helping out. Let's see. Apple still inside. Google still inside. Microsoft triple inside, but it's getting killed. So Microsoft's, they're still selling that thing off. And Microsoft, they still got some range to go, $50. Let's see, Meta, closer. So you got some of the bigger tech names helping out, that's a good thing. You see the 1 minute triangle, 3, slight penny lower, slight penny higher, slight penny lower. So what momentum or continuation is, we look back to this. So 2, 1, 2 down continuation. Or momentum, big red, slight, and big red again. All it would be is this triangle if it can break out of the bottom. Not, this is the triangle, right? You'd want to pop out of the bottom of that thing. Meta with the rev strat down. Let's try to make low day for 20 minutes. Let's see. Microsoft, they're rev stratting. Google's rev stratting. Apple is 2260 from high day. So you got all the big capper names. That should make it easy for SPY to do this. Only issue is just all of this action is still inside 60 minute. So one way you can look at this is you can say all of this is consolidation, which is why it's been kind of a mess in here. They're unable to take this out, unable to take this out so far. So we need to take out one side of this range. It's just how are we going to get it done? Semis was quick. There's the inside fivers, SPY and Qs closed out. If I show my initial move again, that shows when I enter the put. So it's right here. So we call this good morning broadening formation or good morning triangle. They go down, then they go up, stop them out. Anyone short in here, they get stopped out. The buyers bought, and then we go back down again. Because these buyers were the losing trader, which caused this with the seller kicking in. So almost every morning, that's what the market's going to do. So you'll see in this case, lower lows, highs, new highs, stops those guys out, and goes back the other way, and then this is a choppy mess. But the good morning triangle in here was like this. And then you'll see they make slightly lower lows in here. And then the good morning triangle plays out into end of day. Lower low, boom, high a day, and boom, all the way the other way again. So right now, this is just tiny. This is why it's much more tricky today, and we haven't spent much time, trading after the first hour. And we'll see if that can change. The 30s are still good for 20 minutes. But it has to, what goes up, or what's going to go down must go up first, is how we want to think about it. And the easiest way to understand what the market's doing is to think in the terms of what is, if we're looking at this, it's like, what is everyone else doing? It's like, well, this week, since Tuesday, or what, is this Monday? No, since Tuesday, everyone's shorting. So where would the bigger position be? It would be a long, but are we anywhere near coming into these highs or into this stuff? Because everyone's short in here, right? No, almost no one was short going into end of day yesterday. Maybe some people. So we get in here, everyone's short today. What happened? Well, they went up, stopped some guys out, came back down. They went up again, stopped some guys out, came back down. So the seller's been here all day. It's just, right? Maybe they've sold everything they've wanted to sell this week. They've had, you know, all week to do it. Yeah, you want to think about how are you going to screw the most people over? That's a good way to put it. Like if we go to the quantum sector, this is QUBT, quantum computing. When price is up here, right, how would we screw the most people over? Well, if we went from 23 to 13, that would screw everyone over. Retests, destroyed. Everyone's screwed. That's what it does. Price discovery is, it's literally just meant to allow everyone to buy and everyone to sell at their prices. Well, what is a gap? You ever thought about that? So why is this, what is this gap? Well, it's showing you if you bought into the close yesterday, when this opens here, you got to sell. Get out of that thing. You're screwed. If you bought at 662 and it opened 656, you got to sell. Right? Now, for that to play out, we want to see it go up first and then sell it. Because we want to have these guys selling with us when or after someone else tried to buy it. Because imagine you go in here, you're buying like 100,000 shares. You're like, I'm going to punch him in the face. I'm going to buy 100,000 shares. And then I come back and I'm like, all right, well, me, Goldman Sachs, Morgan Stanley, traders, we actually have like 10 million shares we're going to sell at the bid. And we're going to do it right there. Down they go. So we're taking other guys and we're lining up sellers and buyers against them. So here's an example, right? So it goes up a little bit, but by the end of the day, almost everyone's a seller in here. Gaps down, the selling continued, everyone's short. Everyone's short into this stuff. So the bigger move would be to buy it, but it has to go down first. So look at this. Everyone's short. Someone tried to buy it, and then they sold it back down. There's your broadening formation right there. Slight lower low to the 3. That's how you time it, and you're in. Try and go take them all out. And that's what happens. Now, the same thing happens both ways, though. So it goes up in here. Everyone's now long. You could say, hey, we filled the gap. Sure, right? You can use that. But everyone's long. So it reverses. And you'll see, we go to like a 15-minute. What really happened? Sell, sell, inside bar after a broadening formation. Buy, 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 inside bar. Buy, 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 buy. Reversal right there. So they go up, they stop everyone out, and then they keep going. So if you ever see a broadening formation, like kind of like this one, right? Just because it didn't hit the other side doesn't mean it's not a crowded position, right? Everyone's buying it all through here, and then slight higher high right there. Wipe out. Now we're still stuck, right? We didn't take out these lows. We didn't take out these highs. It's still stuck. So it goes right back to broadening. 3, slight lower low, slight higher high, slight lower low, and then right back stuck in the middle again. It's like they are just demolishing people's stops in here, right? Both sides of the range. What you'll see today. So we can see the 30-minute, it did work, it reversed, but it did not hit its target so far. How long do we have? We have 13 minutes left. There's still 13 minutes if it's below the previous 30's low to try and take this out and this out and this out. Now if we go to the 5-minute, double inside 5. So if this breaks 2, either that's going to work or it's going to start a new broadening formation. And this would be momentum. 1, 1, and then 2 down. And this is why we don't want to add on continuation, or at least we prefer not add. We don't want to enter on continuation. As you can see, reversal was here, the 3, 2, 2, 2, so down, 1, 1, down. So when you add on continuation here, you're at risk of being in a crowded trade. Everyone's short in this, and then there's more shorts entering the market here. But if you already made the money, right? If you shorted it up here and you're already $1 in profit, you can add to it. So the further price is from your initial entry, the better the add will be, because it'll be really moving for one, and for two, you're not going to risk your own money to add. We never want to do that. We want to go small and then risk their money to add. But you can see right here, this would be what it looks like. And we're really just watching this by 5 minutes since everyone can look at that. But this is your 2, 1, 2 continuation. And this continuation here is occurring with the 30-minute, which has 12 minutes left. So see if they're weak enough. Come on, sell us. Again, we have the daily, weekly, monthly, 60-minute guys selling. So do it, right? Like, there's no reason not to. They've just been kind of timid today. So you can see for 5 minutes, that signal, they tried it down, didn't work. Now what are they doing? Well, they made slight lower lows, did not stay there, came back in. So we're still stuck within this tiny little broadening formation, but it got slightly bigger and came back. And again, this is why I'm not trading this right now, just because it's still inside 60. You could be the 30 guy, right? But it's just a mess down here. That's why the shorts are better from last week, or not last week, but earlier in the week, the daily triangles instead of 5 minute, 1 minute broadening formations. Oops, ow. FedEx is still down there. Get energies. I want you guys to understand the big broadening formations. That's where it's at. The small ones, it's really not. They're not good unless you have the big ones actually kicking in already. You can see energies. This nice 15er one. This is bigger, almost 1%. At percent, that's pretty good. We go on this SPY, you can see how it's really small. When it's really small like this, it's just less likely to actually take out either side. It's just more likely to get stuck. You can see right here, they're trying to re-break it again, and that's a lot closer to taking out these lows here. You're like a 5 second, you can really see this thing. You can see we started this one, and then I got stuck in the middle, started this one. Tested the lows. Lower highs, so the buyers weren't aggressive enough. Came back to the lows. This is your support right here. We break through it and stay through it. It's always about staying there. Placing most of my trades on the 5 minute. Yep. No, those higher time frames are even more important if you're day trading. Because guess what? During the trading day, if you're just looking at a daily chart and a 60-minute chart, you could be trading a market that is consolidating on the year, quarter, month, and week. And then you're expecting that market to move if it's consolidating across every time frame besides the day and 60. You're expecting it to move. Wrong. Doesn't work. Because you'll hear, if you go read any technical analysis book, they'll say, what do most technical analysis books say about market conditions? Let's see what they say. So look at this. Books such as those that are on trend following argue you should respond to what the market is doing, not forecast what it should do. This works across many conditions. So if it works across many conditions, I mean, it also doesn't work across other market conditions when paired with rules and risk management. Right? Support and resistance define where the market pauses, reverses, breaks out, central, blah, blah, blah. Identify the condition first, then choose the method. So in a trending market, moving averages, breakouts, continuations. In a ranging market, support and resistance, mean reversion. In unstable conditions, what does that even mean? They don't know what it means. They emphasize stops and position sizing. Like, what does that even mean? Since they don't know what it means, we know what it means. In a trending market, what's a trending market? Well, it looks like MU on the year. Is this trending this year? It's a 2 up. A 2 is a trend, so it's trending up this year. What do we do in a trending market? We buy in the direction of the trend. Breakouts can be bought, right? But we're going to buy reversals in the direction of the trend, broadening formations in the direction of the trend. What about in a ranging market? So if we go back to IBM this month, inside bar, ranging market, what should we be doing? We should be shorting highs, buying lows, going both ways. So if we look at IBM just this month, you'll see the broadening formation in here. So this is beginning of the month, new lows, buy it, it makes new highs. Then you'll see the 3 again in here, makes new lows, buy it, makes new highs, and then it breaks out. So it actually stays up. And then up in here, you're like, this is a really bullish looking chart, right? It's going up this month. It's still an inside month. So it makes the highs. And we'll see in the broadening formation, they were too weak to make new highs. So we didn't see a slight higher high. But they make new highs, they come back down. And you're like, oh, now it's going down this month. Really bearish. It's like, then it makes slight lower lows and then it goes back up. And you're like, oh, wait, it's actually going up this month. Then it makes the slight higher highs to this stuff. And then it goes back down. You're like, oh, wait, now I don't know what I'm doing. Because when you're inside on a bigger time frame, it's going both ways. It's reversing all the time. Like, look at this. Reverses up, reverses down. Then it reverses back up, goes up, then it reverses down, then it reverses back up, then it reverses back down, then it reverses back up, then it reverses down, then it back up, then down, then 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 back up. Over and over and over. You're going to get killed in this. It's a consolidating market. So if the condition is the higher time frames consolidating, you can get destroyed if you don't know that. And you're not going to know it. If you just look at a daily chart, and you're zoomed in like this, you can look at this and you're like, wow, it's really a trending market this month. The first week of the month, sure, but the month is an inside bar, so then it goes back to consolidating. So we need to use multiple time frames. SPY? Yeah, look at this. And this is why we don't like the tiny ones. Look at small, 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 small. It's a little bigger. Now it's bigger like this. And if we go to the 60-minute, see how it's still inside 60? Consolidating market for the past 2 hours because they're unable to break that consolidation. So you can see how this is testing both sides really fast. And then it gets a little bit bigger. Now it looks something like this. And this is why. So again, when we look at this, everyone's short today, right? So this is going to be, it's going to be trickier to get these entries here without taking out previous highs and then coming back through. Now, since we have this little broadening formation on the 5-minute right there, they're trying to, but in order for that to work, they're gonna have to reclaim, see all these levels. We'd have to come back below all that stuff. Then they could try and actually rip through. Right now they're retesting, you could say, retesting the previous highs. And that's why when we are trying to place trades, we want crowded positions. We want everyone long and then it reverses. Show you some examples. It's like Lululemon, right? So we can trade this stuff, the smaller range, 3, lower low, higher high, everyone's long, then it reverses right there. 452, boom, right? Huge. This 3 up and then back down. Then you'll see this one, 3 up, back down, and it starts crawling its way back. And look at this mess. Ugh. All of that. And all of that comes from you make this low, and you can see this is all consolidation right away. So if we go to the quarter, look at this. 3, consolidation, 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 consolidation. It breaks right there at 409. And then boom, boom, both sides. And then all the way back through. And we'll see in this case, everyone gets long, didn't quite take out the highs, but then it reverses here. All those longs got in trouble. And everyone short reverses here a little bit. And then 3, and they break out of all this stuff. We look like this. Break out of it, test it, and Lululemon is no more. So you can see right now, they go back to inside 5-minute, back to 3-1-15. So we have a broadening formation now, 3 on the outside 15. The 30-minute, you'll see 2 up, 2 down, so it's still a downtrend, but then it's back to 1. The 60 is a 1. So it's inside 60, inside 30, inside 15, inside 5-minute, destroyed. There's no way. That is just a straight consolidating market. Looking for Bitcoin to get smooshed. See it. Nice. So you get the inside day momentum shooter. See the 3 on the 60-minute, that timed high a day, right back through. So Bitcoin for next week, this is a good example of consolidating market. Look at this. 1, 1, stuck, slightly lower, slightly higher, all the way back to the middle, all the way back up, and then comes back in again. So you can see how when it's consolidating, it's broadening right there to the penny and then back into this. Potentially next week, take all this stuff out. Maybe Saturday. Yeah, well, if we're playing this RevStrat 30, like we were talking about before on the 30-minute, if that was going to work, it would have never came back. They're not supposed to come back if they work. And if you've ever heard of ICT concepts, right? What do they talk about? They talk about fair value gaps. And they're like, look at this. I have a fair value gap. And price should act as support at my fair value gap. This is a fancy way of saying our entries down here worked. Because if we take it and it goes flying, it shouldn't come back. So if we're in here, we take it, goes flying, break even, stops us out. All right, didn't work. On to the next. Because every half hour, there's more. Now today, once again, this is a consolidation pretty much all afternoon. I guess all of the rest of the morning after the first hour of the day. Traded. Doji. Nah. Let's see. See, financials firmed up today. So the financials, JP Morgan, Goldman Sachs. Interesting. You see JP Morgan, so many wicks in here. They've been really swinging them around. Might be interesting for next week with that inside bar. And Stanley's a little bit firmer. See, Citigroup, probably the best looking financial if we're going to try and buy that dip. 3 right here, goes down and then right back into it. V. What's a V? I'm talking about this, the V shape that people talk about. Visa. Yeah, that's a pretty big one. Look at that. Now, the only thing is I do think the dynamics or the business model changed for Visa and MasterCard. I don't know if they're going to be the leaders anymore when it comes to that fun stuff. You can see this on the quarter. 3, right at the bottom of that, reversal on the day. So that daily times the quarterly reclaim level at $300, give or take. But does it set up any weekly reversal? Right, they're going to have a little bit of distance to do that next week. So we'll have to see if that weekly buyer comes to the rescue of Visa. So let's see SPY. So they go inside 5 and they break up. It's not going to do anything. Well, we have this outside 15. So we're still inside 15, still inside 30, still inside 60. Now, if we look at the 30, it still hasn't reversed back up. You'll see the 5-minute. I didn't even get to talk about the rev strat. Well, you can see you get the 1 bar rev strat. I don't know if there's some type of news being spoken about. But the reason this happens is normally due to the higher time frame inside bar. Here it is, the 60 on SPY. They're closer to breaking out. IWM rebreaks the 60, so that seller came back on SPY, IWM, and Qs all taking the 60s down. You can see SPY, they tried, and they're still not willing to sell it down. Come on, SPY, do it. I want to be able to close my short before the end of the week. But I want to do that at new lows. Oil news, beautiful. Let's go US oil. It's not really moving that much. Oil, we traded this one yesterday, shorting it up in here. And see if we look left. Played off of this reclaim yesterday, and now today, something like this, as far as that broadening formation. But notice, see how this is all inside bar, all of this price action from these lows, these highs, stuck between this. So they're still going up, but they are inside day. Do I think gold and silver are cooked? I think silver has a better chance of actually making that a new all-time high again than gold. But again, if we never really have to guess. So if we go back to gold, you can see exactly what's going on and where it's at. 3 goes up, right? $8 higher, and then boom, 70 points lower. Now that it's done that, now what? We made the new low. this would be that bottom of the triangle or bottom of the range, 422.25 is that reclaim level. So if they are going to recover, it'd be above that. That's what you'd want to see. The hardest part is since next week, you're nowhere near taking this out, last week's highs. It's going to probably consolidate, so it might not be right away. SPY got bought back up. You're not... Rewind, and look at what we drew out for you. We drew this out. This is over here. They test the highs, they test the lows. This is why we don't want to trade on 1 minute. And you're messing... Like, you just have to realize you're trading a consolidation on the 60-minute, the 2 hour, right? It's not doing anything. The lower time frames, they're jumping around, but the reason they're going back and forth so fast is because it's consolidating. You're just not, unless you're really fast, right? Unless you're really, really fast. This is not what we're looking to trade. We want to trade this move on a yearly chart, because then we have all year to go after this instead of 60 seconds. But you can see how it's getting bigger, testing the lows, testing the highs, testing the lows. Used to trading on 1 minute? Yeah, well, that's the reason most people lose. Because like we were saying before, you could be trading a market, right? If we zoom in enough, everything might look really good. You're like, oh, look at this. Got this nice short right here. You're like, look at how, wow, this thing really moved, right? It really moved. It's down $1. It's $1, right? We want $100, $50, $20. We don't want one. Like, let me show you. So you just saw that. Let me show you Pan W. The same thing. This is a weekly chart. It's the same thing, but it's a weekly chart. There. 219. Oh, it's like, oh, I make $1. Well, this drops 30% down here. 30%. So you can time it the same way. You can trade the 1 minute right up in here if you want. You can be the guy trading the 1 minute here, being ninja, but we want to make $30. Risking, $1, risking 30 cents. So it's the same concept. It's always the same concept. It's just fractal. So if you're trading the 1 minute, most traders, you're not going to try and buy it right here. And that's why you're going to get cooked, because you have to be willing to sell up here, buy down here, or sell up here, right? Buy it and flip it long down here. And then if it reverses again, you have to be willing to sell short again. And you're going to have to do that. You might have to do that many, many times before stuff happens. So I'm not saying you can't use the 1 minute, but I am saying you want the big stuff first. Because like you're saying, so I'm seeing it now. Yeah, so you can practice on the 1 minute. And that's what I've been trying to show you, is drawing this out and practicing seeing makes a new low, then a new high, then a new low, right? And then the big move is this, right? When we break out of it. So if we're waiting for the big move, we're just letting it test until it breaks out and stays out. So you can see it's like from here, buy, then it comes here, short. You're going both ways very fast. Breakout trading habits are hard to break. True. The thing that sets you free is the understanding. So if we understand, this is a great looking buy, right? This chart looks great. It's like, boom, right? Looks great. Whatever time frame you're on. This is now the worst looking buy. This is a short. And it can happen in the same bar. As long as we understand that, we can fix the way we're thinking about it. Because most people, they're doing the market structure thing, right? Like, oh, we made a lower low, so price should make a lower high here, and I'm going to put my stop against this high here. Or, hey, we made a lower low, I'm going to sell the break down. It's a break in structure. But what we need to think is we've made a lower low. Everyone's short. We made a higher high. Everyone's now long. We made a lower low. Now everyone's short. We made a higher high. Now everyone's long. If you can just think that way instead, you're like, everyone's long. then you can understand in your head, if it reverses, that is now very bad because now everyone's taking profit. That's an issue. And you can just see how small this stuff really is. Ugh. The other thing is once you understand ranges, and they can be small, they can be big, then you can kind of do what we did today. Trade the morning session. Right, we had this breakout of this. You can trade the breakdown of that. Maybe you time it perfectly, but you can trade the breakdown of that, make some money, reduce some, and then if it's just chopping like this, we're done. Just wait. What you're waiting for is either side of this range, low of day or up there, to be taken first. Zig when everyone else zags. Yeah. Like you got to think, right? So like coin, here's a really good example of a live one we posted to Twitter. I post this on Twitter and a lot of people will be like, why would you buy that? Right? Like, why not buy the things at all-time highs? Well, everyone's short coin. Everyone sold it. They're like, this is now looking like terrible looking chart. Perfect time to buy. Because if you buy and then other people start buying and then shorts start buying, it's like, all right, that's what a winning position looks like. You could see how it happened in here. Everyone's short right here, perfect time to buy. Everyone's long, perfect time to sell. Everyone's short again, perfect time to buy. Everyone's long, all right, perfect time to take profit. And that's exactly what's happening. Boom, right, profit taking. And you'll see they triangle they out. Broadening formation up in here. Retest right there. Perfect time to sell. And then perfect time to try and buy it again. Doesn't mean it's going to work, but if it's going to work, that's the perfect time to do it. Chop, 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 chop. Let's see if we can see like a really fast one, like a 5-second, so we can see it happen in real time. I'm just going to let this play. I'm going to get some water. Let's see. Triangle layout. Let me go to my Twitter. I'll show you. So the question is, what is triangle layout? It's this. They buy. They get stopped out. Triangle layout. Then we buy. There's our position. So they buy. Triangle they out. We buy. Make sense? So when you're trying to buy a trend, you want them to triangle they out. Because you get the triangle or your broadening formation. And we call it that because, for example, let's just say hypothetically we're in a downtrend and we want to sell this thing. What we're looking for is a triangle first. So triangle, short signal right there. So triangle they out, signal, get me in. Right? And it's pretty much that. That's all that's happening. So we look here. They short, triangle, they out, then we get back in. And the same thing is happening all the time. So we can see like they bought up in here, triangle, they out, that's the time to buy. It's just simple way to understand it. So if we look at the big triangle that we're seeing here, low, new high, new low. That's how big it is right now. But when I'm trading on the 5-minute, I thought it was 3 or 4 time frames. Yeah. So, but this is the thing. It's how tradable are those time frames? So we're looking at a 5-second right now. Let's just look, when market was really moving up here. Or actually, we'll go to a 15-second. I'm just trying and show you what I mean. So how tradable is this? Like if we're looking at this. Short, buy, short, buy, short, buy and short, buy, short, buy. Do you see how many signals there are, right? So this is not very tradable just because the volatility is too low, right? If the volatility was high, then you get the shorts that are playing out like this. So short and then buy, right? And then short, then buy, then short, then buy. You see it gets stuck right away, consolidating. So it's not that you can't trade certain time frames. It's how tradable is it? Like on non-farm payroll, when that news comes out, the minute chart's much more tradable than it is 1 hour before the Fed starts speaking on a Wednesday or whatever, right? Just because volatility increases and decreases. And that's the only difference between any asset class or any time frame is volatility and how long the time frame lasts. Because a monthly signal lasts 20 trading days or a whole month. A 60-minute signal lasts 61-minute candles. Much, much less. So for day trading, you want to know the month, week, day, and 60. That's minimum. So we want the month, week, the day, and the 60-minute. And then you can add in, once you've analyzed these charts, so like if we look at SPY, for example, this is how it works. So if SPY's below its month open, that's right here. We know it's going where? Down there, broadening formation, 650.85. We know that all month. So for a day trader, what are we doing? Let it go up, then short it back down all month. So if we're a daily guy, we can see the triangle here and the triangle here. We know it's going down this month. This was the first one that caused that. And then this was the second one that kept it going. Now for a 60 guy, and sorry, the charts are really ugly here. So for a 60 guy, we can go both ways. At the lows, everyone's short, profit taking, right? Once you've stopped enough guys out, then you can try and short it again. If we're on a 5-minute, the 60 still matters. And I'll prove it to you, right? So we look at this 60-minute, it goes new highs, new lows. That's your broadening formation. So if we go to a 5-minute, the 60-minute broadening formation is the 5-minute broadening formation. Goes up, new lows. So if we're going to time an entry at the broadening formation, we need to know we're making a lower low to the target here on the 60. Because then you can buy the 5-minute right there and then add, reduce, stop some people out. This is your triangle, they out. They buy, they sell, we buy, add back, get more. Huge. But then we also understand this doesn't last all month. It's not like we could hold that all month. So if we go to when that happened, this was Monday. So the week, the day, and the 60 were green, the month was red. So you had this week, today, and right now to do that trading. The next day opens. This day, the buyer didn't really come back. They bought some, but that was it. The next day, they come back and sell. The next day, they come back and sell. The next day, they sold more. Then sideways, gapped up, but it went sideways. They come back and sell. They come back and sell. They gap down, profit taking, but it didn't reverse. Then they come back and sell. So the monthly guy has been selling in here, which is why we've had 1, 2, 3 green days. 1, 2, 3, 4, 5, 6, 7, 8, 9 red days this month. Now, if we go to the beginning and get a better count. So 1, 2, 3, 4, 5, 6 green days. 1, 2, 3, 4, 5, 6, 7, 8, 9 red days. So if we're purposely trading in the direction of the month, we know the green days are likely to be reversed by a red day more often than not. Doesn't mean that broadening formations don't happen, right? Like, could this have been gap down by and rip back through? Yeah, maybe. But the day and 60 are what control it. So we just want to think, in the direction of the month and week, we have way more evidence it should just follow through. We can hold positions and let them play out, like shorting this Tuesday and holding it for 20 points. When you don't have the month and week in your favor, you only have 60 minutes, or you only have the rest of the day. Like if you're a buyer of SPY, you had yesterday, the next day opens, boom, now it's a seller. So you had one day to try and buy it. That was it. Because the week was red, the month was red, you had one day. Closing all my positions every day. Yeah, that's okay. But this is the thing. If you know the bigger move is up or down, like we knew to short things on Tuesday, and I'm not trying to brag. I just want you guys to understand this concept. SPY daily scenario 3 equals broadening formation. True. For now, it went up above and reclaimed. Will this be similar to last week, Wednesday, where it goes up, reclaims, and it goes back down? Yes, right? We're looking for it to be similar. So if we know that's true because we're using that daily and we know the weekly time frame, the monthly time frame, they're setting up to go lower, then we know we're not going to try and buy low of day. We want it to pop up, come back into this 3, and then make new lows. We want this 3 to happen. We want it to pop up, come back into the 3, and make new lows. And then once it works and it starts going like this, hold, right? We're in. Because we have the weekly, daily, 60 seller, monthly seller, all in here. And then it gaps down. That's a good reason to reduce or take profit for holding overnight. And then you'll see they pop up, broadening formation, they come back in. The bigger move is to the downside this month, right? So for an overnight futures trader, that's a good thing to know about. So it just shows you where's the bigger move, depending on the color of those bigger time frames. So the bigger move this week is always the color of the week. The bigger move today is always the color of the day. Those colors can change with broadening formations. So you can time when they change. That is true. But we always want to make sure to align those in our favor. We go back to the 5-second on SPY. You see the triangle we were just pointing out before. This one. Everyone's short. All the way up. And you'll see in this case, it was equal highs. So they're just not able to get that bid above that. But then all the way back down because everyone was long. This is a 5-second time frame. Pretty cool stuff. But that is just how small this range is inside 15. Disgusting. SNDK still giving you the outside day. I know Sarah's watching that. You see what SNDK did. And this is why this is a perfect example, actually, of what we were just talking about. So we can see today the seller's here. The monthly buyer is not here today. In fact, this is the top of a monthly broadening formation. So that's worth noting. This is why we use that monthly time frame, so we know where we're at. The week, it is going up this week. It's green, but it's at the top of the monthly and weekly broadening formations. So this is where things could change. Top of the range. The day is red today. So is the bigger move to buy this back into the morning 3, or is the bigger move to go in the direction of the day to the downside? Technically both. Because for 60 minutes, you could have tried to buy it, but it did not work. Price failed the previous 60s highs. So that did not work. And then for another 60 minutes, you get to short it here below 726 with a target to low a day and a target to go outside day, 34 points. So you can try to buy it. Didn't work. Go the other way. Now compare that to yesterday. It's the same thing, just the other way. The day was green here. They tried to sell it. Didn't work. The bigger move is in the direction of the day. Buy it here, hold it, and then sell it at the close. So you can see that daily is always the bigger move. We look at let's see, Dell 60. Yeah, so 56 seconds if they're going to set it up. What you'd be looking for is, can you take out the morning lows? Is anyone that's long in here, they're long against these pivots and morning lows. So if that's going to puke, you'd want to go like this. Now, when is this happening? Well, we're about halfway through the month. It's happening right here. Level of reclaim, right? 167.94. So top of the range. The week is still bright green. But if they're going to take profit on the gap up, this 60 might cause them to do that. The day could flip back to red. So if this 60 works, the day goes red, showing the day and 60 sellers profit taking against the week and month. Now, if that were to work, what could it set up? Well, maybe a 322 for Monday. It's probably not setting up a weekly signal. So maybe, right? It's a gapper. But here's a new 60. Once again, SPY, double inside 60. Eventually, this has to become a 2. It cannot consolidate forever. It's not possible. Or else the markets would have to stop trading. So this is the broadening formation. If we can break out of this thing, this will cause that too, hopefully. I'd be very surprised to see 3 inside 60s, but can happen. Bye-bye, SNDK. Yeah. All the way to the lows. Look at that. What are you guys thinking about the 3s today? Love to hear some feedback. Especially if you're confused about anything or if you have any questions. But I'm gonna have to get going soon. I didn't plan on sticking around this long. Incredibly helpful. Good. SPY, so watch this. See the broadening formation? If we can break out of that, it will cause the 60. And then we'll see, does the 60 reclaim this broadening formation or do we stay out of it? But you can see what happened. We finally got enough buyers in here where when we start hitting their stops, it actually speeds price up and we exit the range. So now you can see we take out the lows of the previous 60. So that scenario 1 consolidation becomes a 2. If that fails, it becomes a 3. Hopefully, we get the pukage until the last couple hours of the day. I understand better now. The 3 is the broadening formation. Awesome. And that's really like, once you understand 3 is broadening, you're in. You are in. 3 is my new favorite number. Beautiful. Because no one can take that from you. It's for a 3 is a 3 is a 3. Just like how your cat's a cat and your dog's your dog. There's no failed 3. Doesn't exist. To be or not to be. Isn't it very interesting, though, how you can very clearly see where that breakout occurred and how it caused the 60-minute to break after consolidating for pretty much 3 hours, right? Now, again, might look really bearish to you, but it has to stay that way because we know if it goes a couple pennies lower and comes back, that's no good. So pretty much we're looking for low a day, and then we don't know. Might go all the way back through with short covering at the close or at the end of the day. Or they might have a lot more to sell. They could drop it 10 points, 20 points. It's really up to them at this point. Dell takes the 60. Nice. What I want you to see is look at how Dell, you have all these pivots right here. You have the daily open. Notice how when it hits your entry signal, it goes boom, wham. It's because you're taking out pivots, you're taking out other traders who were buying this thing when you enter. And this is why the tight stops are so important to understand. If we know traders are putting their stops against obvious levels within a previous range that they were buying in, then we can use them to cause things. You can use this 1-minute broadening formation right there. You can use that to break the 60. Because if that works, it breaks that, which breaks the next pivot and the next, and so on. And that's how you tighten things up. You can see SPY, so they retest it. We want them to stay down. They're actually going to get this thing cooking. Making sure you draw the triangle correctly. Just draw right to left whenever you see a 3. And once you've done that enough times, you should be able to just find them. Because when you see a 3, like find a daily one. Or like even right here. We find a 1-minute outside bar. Draw. Okay, let's go to like a 5-second chart. See what that looks like. And you're like, oh, okay. So that's a broadening formation. You might be like, I didn't think it looked that way. Well, now I understand it can look that way, right? Because at the end of the day, all it is an understanding that this happens. You don't have to draw them perfectly. You just need to understand they sell, they buy, and then we sell. And you can see, bang, nice retest you got there. Take them out. Puke. There's our target. Right here on the SPY, 650.84. Like we said, many hours ago, that was our target. Now what? What is SPY now? Outside quarter. How would you have known? Well, if you watched Alex's live stream, you would have known up there at all-time highs. When this went red on the quarter, boom, 35 points. Goes 12 higher, 35 lower. Now we still have 11 days on the quarter left. So once a 3, always a 3, can't not be. Which means we're at the bottom of a broadening formation and we don't know, right? All we know is they could go outside on the 6-month as well, but this now becomes key to us, last quarter's low. But finally, we take them out. And now we're going to say we don't know. This is your current bigger triangle. And you'll see how that small one that we showed you on the 1 minute, we go back in here. And these ranges are so tiny, but you see how the small one, when it broke out right there, caused the big one. So you go right into the bottom of the big triangle. And then the question is, are we going to be able to expand that, or are we just going to go right back through it again? And that's always the same. It's always the same question. Do you stay there or not? And depending on the traders, some traders, they will just exit weak hands. Some traders will trail the stop against the highs. Some traders will keep a break-even stop wherever they shorted. Let's just say hypothetically you shorted here, you just keep your stop there. But at the end of the day, it's the bottom of the range. We don't know. So you're either reducing, defending, moving stops, just guaranteeing you're not going to lose if it were to spike up. And once you've done that and you have a winning trade with a break-even stop, it's time to go golfing. And that's what I'm going to do today. I'm going to hit some golf balls and have some practice. But I hope you guys enjoyed. And I will show you my SPY execution. Or I guess my SPY P&L right now. Come on. Before we end off. Not the biggest gainers in here today. But you can see I was able to make, what, 28%. I was using Next Fridays just because when I stream, I try not to trade 0 DTEs. They can get away from me really quickly. But $700, we'll take it for a Friday. And that's just on SPY, and that was really my main focus today. And if we go to FedEx, you can see we haven't really gotten much out of that. I'm pretty much just break even on it. Let me just double check and close her out and see. Yeah, so my initial FedEx put was at 880. I just sold 2 of them at 988, and I had 2 other ones that were at like 1060 on an ad. Or wait, where was it? Yeah, 1057 on an ad, but I got stopped out of the ad break even. So I made a couple $100 on FedEx. And those are really the 2 main things that I was looking at today. Outside of that, I don't got much to share with you. But you will have until the end of the day for this seller to keep kicking in. So feel free to risk their money, let them go after it on the sell side. And I would just draw this 5-minute triangle out and just watch what price does. If you sit in front of here long enough and you just draw these out, you'll start to see very clear. So that's all I've got for you guys today. I hope you enjoyed the stream. I hope you learned something. You take away 3s are broadening formations. It's huge. And feel free to share this with someone that you want to learn about the strat. But that's all I've got. I hope you guys have a good rest of your day and a great weekend. Have a good one, and check us out at stratalerts.ai if you want more. Peace. Call Andrea.